Hi guys, how are you? This is CA Balakrishna. In this class, we'll be discussing insolvency and bankruptcy code. Okay, we'll be completely revising this insolvency and bankruptcy code. So, without any further delay, let us start the revision. First of all, basic one. What is the difference between code versus act? Act means which you already know. Okay. Law relating to particular aspect. Okay, a single law will be known as a act, whereas code is a collection of various acts. That would be the basic difference between code and act. Next, difference between the terms insolvency, bankruptcy and liquidation. First of all, insolvency means a situation in which assets are less than liabilities. Such type of situation would be known as insolvency. Now, if this insolvency situation is left untreated, then in case of individuals, it might result into bankruptcy, and in case of companies, it might result into liquidation. This is a basic difference between the terms insolvency, bankruptcy and liquidation. Next, now applicability of this code, insolvency bankruptcy code. Basically, this code is applicable for insolvency, liquidation, voluntary liquidation and bankruptcy of the following entities. What are they? Of company, LLP, any corporate under any law, and partnership firms and proprietorship firms, individuals and personal guarantor of corporate debtor. To all these people, IBC will be applicable. Coming to the non-applicability of IBC. This IBC will not be applicable for financial service providers. Okay, and this definition of financial service providers does not include NBFCs having asset value of more than 500 crores. That means for NBFCs having asset value of more than 500 crores, this IBC will be applicable, and for all other financial service providers, this IBC will not be applicable. Hope this is clear. Next, first of all, application to initiate CARP proceedings will be filed with the NCLT, and the triggering point to file the application is occurrence of default, and the value of this default must be more than 1 crore rupees. That would be the triggering point for making application. And this application, okay, for CARP can be made by either financial creditors or operational creditors or corporate debtor himself. I think you know the difference between financial creditor and operational creditor, so I am not differentiating that. Now, going to application by financial creditor. Okay, if the financial creditor wants to initiate CARP proceedings against the corporate debtor, then what is the procedure? Let us see. This financial creditor, either himself, solely or along with other financial creditors, can file application with NCLT. Okay, with other financial creditors can file application with NCLT. Now, along with this application, there are some attachments to be provided. What are the attachments? The first attachment is record of default with information utility. Okay, in the information utility, there will be record relating to the occurrence of default. Such a record must be provided along with this application. Okay, and also the application must propose name of a resolution professional to be appointed as insolvency resolution professional. Okay, the name must be proposed, and also such other information as may be prescribed. These attachments should be given along with the application by the financial creditor. Now, once the application is given by the financial creditor, adjudicating authority, that is NCLT, will within 14 days either accept the application or reject the application. Now, when will the adjudicating authority accept the application? If the adjudicating authority confirms that these three conditions are satisfied. What are they? First of all, default has been occurred and application is complete. There is no defect in the application, and also in the application the financial creditor has proposed a name of resolution professional. Now, there should be no proceedings pending against this resolution professional. If these three conditions are satisfied, the application will be accepted by the NCLT. If at all these three conditions are not satisfied, application will be rejected by NCLT. Now, before rejection of the application, NCLT should give notice to the financial creditor asking to rectify the application within 7 days. Hope this is clear. This is relating to application by financial creditor. Next part would be application by operational creditor, that I have discussed in a separate video. I am attaching that revision video after this. You can watch this. In this video, we will be continuing the IBC part. In the part 1 of the video, we have discussed till financial creditor part, that is application for initiating corporate insolvency resolution process can be filed with adjudicating authority by 3 people. One is financial creditor, another one is operational creditor, and the final one is corporate debtor himself. In the previous part, we have completed application by financial creditor point. Now in this video, we will be starting with application by operational creditor. Hope that is fine. See, the application by operational creditor will be governed by 2 sections, section number 8 and section number 9. What section number 8 says? Section number 8 says that the operational creditor, before filing an application to initiate CIRP process, first of all he has to send demand notice to the corporate debtor, asking the corporate debtor to please repay the amount. Okay, such a demand notice along with the invoice has to be sent by the operational creditor to the corporate debtor. Now, once such a demand notice is sent, the corporate debtor has to give response to such demand notice. What type of response the corporate debtor can give? The time limit for responding is 10 days. That is, corporate debtor has to revert back. One second. Corporate debtor has to revert back within 10 days with either of the responses. First one is existence of any dispute. Whether corporate debtor has not paid the amount because of the reason of existence of any dispute. Whether he has not satisfied with the quality of goods or services that have been provided by the operational creditor. Whether there is any default that is being in existence. That is the reason why the the corporate debtor has not made the payment to the operational creditor. If there is any dispute, he has to respond with that dispute, or fact that payment has already been paid. The corporate debtor might have already paid the payment, but the operational creditor might not have received it or was not aware of the fact that the payment was made by the corporate debtor. In such case, corporate debtor has to respond saying that I have paid the amount to you with the proofs. He has to respond within 10 days. That is said by section number 8. Moving to section number 9. What if the corporate debtor has not responded to the demand notice sent by operational creditor? In that case, operational creditor can initiate CIRP application against the corporate debtor under section 9. See, if corporate debtor do not respond within 10 days, then operational creditor can file an application to tribunal, that is adjudicating authority, with the following attachments. Along with the application, the operational creditor has to give following attachments. What are they? First one is, one second. See, the first attachment is copy of invoice. That is, the operational creditor might have sold some goods or services to the corporate debtor. Now, the invoice relating to that has to be given. After that, affidavit. Affidavit relating to what? Affidavit stating that the operational creditor has given demand notice to the corporate debtor, but corporate debtor has not responded within 10 days. Such affidavit has to be given by the operational creditor along with the application. That is the second attachment. And the third attachment is certificate from financial institution stating that operational creditor has not received any payment from the corporate debtor. Okay, the operational creditor might be maintaining a bank account with some financial institution. Now he has to get a certificate from such financial institution stating that there has been no credit to the bank account of this operational creditor from the corporate debtor. Such a certificate has to be brought from the financial institution. Next, copy of record with the information utility. Information utility is basically a database where all the details relating to the debts given by the operational creditor or a financial creditor will be stored. Okay, once the operational creditor gives any credit or debt to any person, he has to submit that information to the information utility, and even the financial creditor should also submit the information to the information utility. Now at the time of initiating this CIRP application, the information that has been filed with the information utility should also be given as a attachment to the application. Hope that is fine. Next, any other proof of existence of default and any other proof which gives a confirmation that yes, there is a default from the corporate debtor. Such proofs have to be given along with the application. And the sixth one is proposing a name of IRP is optional. IRP means interim resolution professional. When a operational creditor makes application to adjudicating authority for initiating CIRP, he should either, it is a optional one. Okay, if he want, he can propose the name of interim resolution professional, or he might not propose the name of interim resolution professional to the adjudicating authority. But in case of application is made by financial creditor, it is mandatory on the financial creditor to propose the name of interim resolution professional. But for operational creditor, it is not mandatory. It is at the option of the operational creditor. If he wants, he can propose the name of interim resolution professional. Otherwise, he need not give the name of interim resolution professional. Those are the attachments. Once the application is made to the adjudicating authority shall within 14 days from the date of application will either accept the application or reject the application. In which cases it will accept the application? In this following 5 cases it will accept the application. First one, application is complete, okay, and payment is not received. Yes, really the operational creditor has not received the payment from corporate debtor, and demand notice or invoice is delivered. Before making application under section 9, this operational creditor has given demand notice under section 8. Yes, and corporate debtor has not given any notice of dispute. Okay, and no disciplinary proceeding is pending against proposed interim resolution professional. See, if the operational creditor has proposed the name of any interim resolution professional, in that case no disciplinary proceeding should be pending against such a proposed interim resolution professional. If at all any disciplinary proceeding is pending against such a IRP, in that case the application will be rejected. Okay, if these 5 conditions are satisfied, the adjudicating authority will accept the application. If these 5 conditions are not satisfied, see the opposite of that, then the adjudicating authority will reject the application. Now before rejecting the application, adjudicating authority should ask the applicant to rectify within 7 days. Okay, before rejecting the application, the adjudicating authority should give a chance to the applicant to rectify his application within a period of 7 days. Hope that is fine. Next, once the adjudicating authority accepts the application, the CIRP process will begin. This is section 8 and section 9, which deals with application by operational creditor. Moving to section number 10. Section number 10 deals with initiation of CIRP application by corporate debtor himself. Okay, the corporate debtor has committed a default of more than 1 crore rupees. In that case, he himself can file an application to the adjudicating authority to initiate corporate insolvency resolution process against the corporate debtor himself. Let us see. Section number 10. Committed default. In that case, make an application to adjudicating authority. Along with the application, following attachments have to be given. What are the attachments? First one, information related to books of accounts. Okay, relating to books of accounts, all the information must be given as attachment to the application. Next, proposed IRP, that is interim resolution professional. It is mandatory for corporate debtor to propose the name of interim resolution professional, and special resolution approving filing of application. Now, the application for CARP initiation is filed by corporate debtor himself. That means in the corporate debtor, a resolution, that is special resolution by shareholders of corporate debtor approving filing of application for initiation of CARP process should also be given to the adjudicating authority along with the application. Simply you can say approval by the shareholders in the form of special resolution should also be given as an attachment to the application. Okay, once all these are given, adjudicating authority shall within 14 days either approve or reject the application. In which cases it will approve the application? If the application is complete and no disciplinary proceeding is pending against the proposed interim resolution professional. In these two cases, it will approve the application. If these two cases are not present, it will reject the application. However, before rejecting, opportunity to rectify within 7 days must be given to the corporate debtor. This is section number 10. Okay, we have discussed section number 7 in the previous class, which deals with application by financial creditor. Section number 8 and 9 deals with application by operational creditor. Section number 10, which deals with application by corporate debtor. Now there is a note regarding while making application, you have to propose name of interim resolution professional to adjudicating authority. Now, in which cases it is mandatory and in which cases it is not mandatory? Let us see. Proposing name of interim resolution professional along with application. If application is made by financial creditor or corporate debtor, in that case it is mandatory. Okay, whereas if application is made by operational creditor, then it is optional. He need not propose the name of interim resolution professional. It is at the option of the operational debtor, operational creditor, whether to propose name of IRP or not to propose name of IRP. Hope that is clear. Next, date of commencement of CARP shall be date of acceptance of application by adjudicating authority. Okay, the date on which the adjudicating authority accepts the application would be the date of commencement of corporate insolvency resolution process. Hope that is clear. And for defaults arising from 25th March 2020 to 25th March 2021, no CARP application can be initiated. This is the COVID period. Okay, during the COVID period, if any defaults have arisen, in that case you cannot initiate an application under CARP. Okay, a one-time exemption has been given during this period. The period is from 25th March 2020 to 25th March 2021. Okay, hope that is clear. Now, section 11 deals with persons not entitled to initiate CARP. That means operational creditor, financial creditor, corporate debtor can initiate the application for CARP, but in the following cases they cannot initiate CARP application. What are they? First one, corporate debtor is presently undergoing corporate insolvency resolution process or has completed corporate insolvency resolution process in the past 12 months. Okay, currently he is undergoing CARP. If he is already undergoing CARP, then how can you again file an application for initiating CARP? And he has completed CARP in the just past 12 months. Freshly he has completed the CARP process. In that case, how can you again initiate CARP process? So in this case, CARP process cannot be initiated against such corporate debtor. Or financial creditor or operational creditor is undergoing PPIRP, that means pre-packaged insolvency resolution process, that is introduced as an amendment. Recently it has been introduced. The pre-packaged insolvency resolution process has been introduced recently in the last attempt itself. So if any financial creditor or operational creditor is undergoing any pre-packaged insolvency resolution process, in that case they cannot file an application for CARP against another corporate debtor. Hope that is fine. Next, resolution plan was approved under pre-packaged insolvency resolution process in past 12 months. Okay, against this corporate debtor, a resolution plan under PPIRP, that is pre-packaged insolvency resolution process, was approved in the past 12 months. In that case, you are already having a approved resolution plan. You implement such a resolution plan. Why again you are coming to initiate a fresh application against corporate debtor for a corporate insolvency resolution process? You just implement the resolution plan that was already approved to you. Okay, so you cannot initiate a fresh CARP in that case. Next, corporate debtor or financial creditor who have violated the terms of plan approved in the past 12 months. Okay, in the past 12 months a CARP process was completed, and in that CARP process a resolution plan was approved, and this corporate debtor or financial creditor have violated the terms of that particular resolution plan. In that case also you cannot initiate a fresh CARP process, application for fresh CARP process. Next, corporate debtor is under liquidation. Even in that case also, if the corporate debtor is under liquidation, a liquidation order has been passed against the corporate debtor by tribunal. In that case, you liquidate your company. Why again you are coming for this corporate insolvency resolution process? A liquidation order has been passed against you. You have to mandatorily liquidate. Okay. These are the situations in which the CARP application cannot be initiated. Okay. Next, section number 12, time limit for completion of CARP. Okay, from the date of acceptance of the application by adjudicating authority, within how many days you have to complete this entire CARP process? Let us see. It has to be completed within 180 days from the admission of the application. However, if you are not able to complete the CARP process within 180 days, then an extension of up to 90 days can be granted to you, provided 66% of voting of committee of creditors approve to such extension. Okay, in that case an additional period of up to 90 days will be granted to you by adjudicating authority. Now 180 days plus 90 days, that would be 270 days. Within 270 days you have to complete CARP process. But let's say due to some other issues the completion of CARP process was delayed. In that case, mandatorily complete within 330 days, including extension and time taken for any other legal proceedings. Okay, if you missed the date of the days of 270 days, mandatorily you have to complete by at least 330 days. Okay, that is the time limit within which you have to complete the CARP process. Next, section number 13. Once the adjudicating authority accepts the application filed either by operational creditor or by financial creditor or by corporate debtor, what should the adjudicating authority will do? Let's see. After acceptance of application, it will declare moratorium under section 14. After that, it will make a public announcement under section 15. After that, it will appoint interim resolution professional under 16. Now, in the act, you will be frequently finding these terms. First one, one second. First one, insolvency professional. Next, resolution professional and interim resolution professional. What is the difference between these three? Let me tell you. See, insolvency professional is a qualification, okay, and resolution professional is a position. For example, chartered accountancy is a qualification. If you pass chartered accountant, you are possessing a qualification. After passing the chartered accountancy, you came into practice and you are appointed as auditor of particular company. That is, you have been appointed as an auditor, which is a position. Chartered accountant is a qualification, auditor is a position. In the same way, insolvency professional is a qualification. Okay, an exam will be conducted. Once you pass that examination, you will be called as an insolvency professional. Such qualification will be given to you. Once this insolvency professional is appointed to any corporate insolvency resolution process, he will be known as resolution professional. Hope you understood the difference between these two terms. Now, what is interim resolution professional? Basically, resolution professional has to be appointed by committee of creditors, but the committee of creditors is still not framed. Okay, there should be someone who will form a committee of creditor. Thereby, what adjudicating authority will do is, till the time committee of creditors is formed, adjudicating authority will appoint an interim resolution professional. This interim resolution professional, after coming into the company, will form a committee of creditors. This committee of creditors will either appoint this interim resolution professional itself as a resolution professional, or will replace this interim resolution professional with a new resolution professional. Hope that is clear. Okay, that is the difference between insolvency professional, resolution professional and interim resolution professional. Next, section 14, we have discussed that the adjudicating authority will perform these three actions: section 14, section 15, section 16. Now we will discuss each of this section in detail. First of all, section 14, it will declare moratorium. Moratorium means a halt on some of the transaction. That means the adjudicating authority will ask to stop some of the transactions. Okay, you cannot continue them. It will put a moratorium on some of the activities in the company. Let us see what are they. On which activities the moratorium will be implemented. Basically, moratorium means you have to stop those activities. You cannot continue, or you have to temporarily suspend those activities. That is moratorium. Let us see on which activities the moratorium will be implemented. First one is filing of new suits or continuation of existing suits. Okay, no one can file a fresh suit against the corporate debtor, or the existing suits cannot continue. Okay, they have to suspend temporarily. That is the first activity which would be temporarily stopped during the moratorium period. Who will grant this moratorium period? Adjudicating authority will grant this moratorium period. When will it grant moratorium period? After accepting the application for corporate insolvency resolution process, the first thing that adjudicating authority will do is it will grant moratorium. Okay, on following activities. The first activity we have discussed. Next, disposing of corporate assets of corporate debtor. That means once the moratorium is implemented, the corporate debtor cannot sell its assets. Okay, it should not sell any of its assets. That is the second activity on which moratorium will be implemented. Next, foreclosure or enforce of security interest. Let's say the corporate debtor has taken some loan from some SBI bank, let's say. Now for this loan, it has given a land as security. Now, during this moratorium period, if the corporate debtor fails to pay the loan, SBI cannot enforce this security of land. That means SBI cannot attach and sell off this land. It should stop temporarily. Okay, that is foreclosure or enforcement of security interest. And recovery of any property by owner or lessor. Let's say the corporate debtor has taken on rent the head office. The head office of the corporate debtor is on rented basis. Now, once the insolvency resolution process is initiated against this corporate debtor, what will happen is all the people will try to stop providing services or providing goods to this corporate debtor. So, to protect the corporate debtor, this moratorium period is given. Now, the corporate debtor has taken its, let's say, the office on rental basis. Now, the owner or lessor of such property cannot ask the corporate debtor to give back the property. Okay, it should continue the rent or it should continue the lease agreement, provided corporate debtor must give the rental amount on a monthly basis. Okay, he should not have defaulted in payment of rental amounts. Hope that is clear. On these activities, moratorium period will be implemented. Next, note: essential goods services must be supplied. That means for conducting business of the company, the essential goods such as electricity, the water, and for raw materials to the company for its manufacturing purpose, some raw material will be required. All those materials should be supplied to the company. Okay, there should not be any stoppage in that supply, provided company must, the corporate debtor must pay for them. Okay, it should not have defaulted in paying for such basic essential goods or services. Okay, next, maintain going concern status. The company should, the corporate debtor should conduct its business on a going concern basis during this moratorium period. It should not stop doing the business. Okay, it should continue doing its business. Next, till what time this moratorium period will be effective? See, moratorium will cease, that means stop, on date of approval of resolution plan or order of liquidation passed. If any of these two events happens, at that date the moratorium period will come to an end. What are those two events? First one is either approval of resolution plan or order of liquidation has been passed against the corporate debtor. In these two cases, the moratorium will come to an end. That was section 14. Moving to section number 15. Okay, the next activity that adjudicating authority has to do after accepting the application is make a public announcement of corporate insolvency resolution process. That means it should give an announcement stating that CARP has been initiated against this particular corporate debtor and till which date the CARP will be going on. Such details has to be given. Let us see what are the contents of the announcement. First one, name of the authority with which corporate debtor is registered. If it is a company, with whom the company will be registered? With MCA, that is Ministry of Corporate Affairs. The name of such authority with which the corporate debtor has been registered has to be given in the public announcement. Next, last date for submission of claims. See, once this corporate insolvency resolution process is initiated, it will collect all the claims. That means the corporate debtor might have some dues payment to its creditors. Okay, now in this public announcement, it will ask all the creditors to submit the claims that the corporate debtor has to pay to them. Okay, and there will be a particular date, last date will be given in the public announcement. By that date, all the claims has to be received by the corporate debtor. Okay, next, details of interim resolution professional. The name of the interim resolution professional who has been appointed for the corporate insolvency resolution process should also be given in the public announcement. Why? Because all the claims must be submitted to this interim resolution professional only. All the creditors has to submit their claims to interim resolution professional. Once the claims are submitted to interim resolution professional, he will verify whether all those claims are correct or not, and after that he will form a committee of creditors. Okay, in the committee of creditors he will include all the creditors who have submitted their claims. Okay, hope that makes sense. Next, penalties for false claims. If at all any of the creditor gives a false claims, then what will be the penalty that would be charged on them should also be given in the public announcement. And date of closure of CARP. What would be the last date of CARP? It would be basically 188th day. If at all any extension is granted, such extended date. Okay, moving to section number 16. Section number 16, appointment of interim resolution professional by adjudicating authority. The final activity that adjudicating authority will do is it will appoint interim resolution professional. Let us see. Application. Now adjudicating authority has to appoint a interim resolution professional. Who will be appointed as interim resolution professional? Let us see. If the application is made by either financial creditor or corporate debtor, then it is mandatory for financial creditor and corporate debtor to propose the name of interim resolution professional. Okay, in the application they would have given the name of interim resolution professional. Such a person only will be appointed by the adjudicating authority as the interim resolution professional for the corporate insolvency resolution process. Okay, in case of operational creditor, it is optional. Okay, operational creditor is not mandatorily required to give the name of interim resolution professional. In that case, if operational creditor has proposed the name of interim resolution professional, in that case same person will be appointed as a interim resolution professional by the adjudicating authority. Let's say operational creditor has not proposed the name of interim resolution professional. Now adjudicating authority shall make reference to the IBBI, that means Insolvency Bankruptcy Board of India. In the application made by the operational creditor, he has not given the name of proposed insolvency interim resolution professional. In that case, the adjudicating authority will refer the matter to IBBI. Now this IBBI will select a particular resolution professional, a particular insolvency professional, and will recommend his name to the adjudicating authority to appoint him as a interim resolution professional for the ongoing CARP. Okay, such a recommendation has to be made within 10 days. Within 10 days of reference being made to IBBI, it has to make the recommend the name of the insolvency professional who has to be appointed as a interim resolution professional. Okay, once the recommendation is made, the adjudicating authority will appoint the same as a interim resolution professional. Hope that is clear. Next, note here. Note, term of interim resolution professional shall be till appointment of resolution professional. Okay, till what time this interim resolution professional will hold his office? He will hold the office till the appointment of resolution professional. Once the resolution professional is appointed, this interim resolution professional has to vacate. It might also be possible that this interim resolution professional will himself be appointed as a resolution professional if committee of creditors approve. Okay, that was relating to appointment of interim resolution professional. Next, eligibility of resolution professional. One second. See, eligibility of resolution professional. If you want to appoint particular insolvency professional as a resolution professional, see, you should understand the difference between insolvency professional and resolution professional. I have already explained you. If you want to appoint particular insolvency professional as a resolution professional, then such person should possess the following qualification. First one is he must be independent. Okay, independent of whom? Independent of corporate debtor. Okay, now what is meant by independent? It has been defined. Independent means the following: such person meets requirements of independent director under section 149 of Companies Act. Okay, under section 149 of Companies Act 2013, if you see, there is a list of qualifications that must be possessed by the independent director. All such qualifications must be possessed even by this insolvency professional also. Hope that is clear. That is the first requirement to qualify to fall into the definition of independent. Next, not related to corporate debtor. Such insolvency professional should not be related to the corporate debtor. And the final one, this is important. Such insolvency professional is not employee, partner or proprietor of audit firm, cost audit firm, secretarial audit firm of the corporate debtor. See, this corporate debtor might be having a firm of auditors as their auditors, and it might also be having some secretarial auditors, it might also be having some cost auditors. Now this insolvency professional whom you are appointing as a resolution professional should not be either employee or partner or proprietor of these three firms for the preceding 3 years. Okay, this requirement has to be checked for the preceding 3 years. That is the first condition. And also he should not be employee, partner and proprietor of legal firm which has a transaction with corporate debtor amounting to 5% of firm's turnover. See, this corporate debtor might be taking some legal services. Now the person whom you are appointing as a resolution professional should not be partner, employee or proprietor of a legal firm which is having a turnover of which is having a transaction with the corporate debtor of amount more than 5% of firm's turnover, not corporate debtor's turnover, 5% of firm's turnover. Hope that is clear. For preceding 3 years, even this condition also should be checked for the preceding 3 years. You have to check this condition individually for each of the individually for preceding 3 years. Okay, you have to check for each year in the preceding 3 years. Hope that is clear. Next, that was eligibility criteria for a resolution professional. Moving to section number 17. From the date of commencement of corporate, hope you are able to see this. Yeah. From the date of commencement of corporate insolvency resolution process, all the affairs of the company will be managed by interim resolution professional. See, once the corporate insolvency resolution process has been initiated against the corporate debtor, the board of directors of this corporate debtor will be suspended and all the powers of this board of director will be given to the interim resolution professional. Okay, simply you can say that interim resolution professional will have to manage the entire business of the corporate debtor from the date of commencement of insolvency corporate insolvency resolution process. Okay, see the same, simply board of director will be suspended and their powers will be given to interim resolution professional. Next, section 18 deals with duties of interim resolution professional. You have appointed the interim resolution professional. Now what are the duties that this interim resolution professional has to perform? Let us see. First duty is collect all information relating to the corporate debtor. Okay, he has to gather all the information relating to the corporate debtor. What are the assets that this corporate debtor is having, what are the places in which it is having assets, and what is the value of those assets, and what are the liabilities that this corporate debtor is having, and to whom it has to pay the liabilities, and how much amount of liabilities it is having, and what is the business nature of this corporate debtor. All the information has to be gathered by the interim resolution professional. That would be his first duty. Next, receive and collate claims. See, once the interim resolution professional is appointed, in the public notice the adjudicating authority would have said that all the creditors of this corporate debtor, you please submit your claims. That is the amount that this corporate debtor has to give to you, you please submit them. To whom they will submit? They will submit to this interim resolution professional. Now the interim resolution professional has a duty to receive all those claims and to check whether all those claims are correct or not. That is one of the duty of the interim resolution professional. Next, after receiving the claims and after verifying them, the interim resolution professional has to constitute a committee of creditors. Who will be included in this committee of creditors? He would have received the claims from various creditors. All those creditors will be included in this committee of creditors. Hope that is clear. Next, file information with information utility. All this information which the interim resolution professional has collected regarding corporate debtor has to be filed with the information utility, that is the database. After that, take control of all assets of the company. All assets of the company will be under the control of interim resolution professional. Next, section number 19. Officers and employees of corporate debtor has to cooperate to the interim resolution professional. Okay, since he has newly entered into the company, he would be requiring some cooperation from the employees and officers of the company. So they have to cooperate to the interim resolution professional. Next, section number 20. Under section number 20, we can divide this section number 20 into two parts. Under the first part deals with this interim resolution professional has to take every step necessary to conduct business of a company as a going concern. Okay, whatever is necessary to conduct the business of this corporate debtor as a going concern must be performed by the corporate debtor. Okay, to conduct the business of the company as a corporate debtor as a going concern, whether you want to appoint any employees, appoint employees. Whether you want to enter into any contract, enter into that contract. Whether you want to purchase any asset, purchase such asset. Whatever you want to do to continue the business of this corporate debtor as a going concern, you do that. Okay, who has to do? Interim resolution professional has to do. That is the reason why all the powers of board of directors are also given to the interim resolution professional. Hope that is clear. That is the first part. Second part, submission of proof of claims to interim resolution professional by. I have said that the claims will be submitted to interim resolution professional. Now, what is the format in which you have to submit the claims? For financial creditor, format is Form C. As per Form C format, you have to submit the claims. For operational creditor, it is Form B. And for workmen and employees, it is Form D. And those claims have to be submitted within last date mentioned in the public notice. Okay, within such date you have to submit the claims. Hope that is clear. Now, once the claims are submitted, what he will do? He will constitute a committee of creditors. Okay, under section 21, after receiving the claims, the interim resolution professional will constitute a committee of creditors. See, committee of COC means committee of creditors. The first point is committee of creditors is constituted by IRP, that is interim resolution professional. After that, composition of committee of creditors. Who will be included in this committee of creditors? This is very important point. You please listen it carefully. See, if the corporate debtor is having both financial creditor and operational creditor, in that case, all the financial creditors will be members of committee of creditors. Okay, in that case, operational creditors will not be members of committee of creditor. Only financial creditors will become members of committee of creditors. That is the situation when the corporate debtor is having both financial creditors and operational creditors. Now, let's say the corporate debtor is not having financial creditors. It is having only operational creditors. In that case, from this operational creditor, you have to select 18 largest operational creditors by value. Okay, and that 18 largest operational creditors will be members of committee of creditors. Apart from them, one representative elected by workmen will also be member of this committee of creditors, and one representative elected by employees of the company will also be member of this committee of creditors. Okay, this is the membership. This is the composition of committee of creditors in case the company is having only operational creditors. Okay, if company is having both financial creditors and operational creditors, then all the financial creditors will form part of members of committee of creditors. In that case, operational creditors will not form part of members of committee of creditors. Hope that is clear. that is section number 21. Apart from basically this section number 21 is a very huge large section. Basically these 2 points are important from that section. There are some more points that you will be able to understand once you read it. So I have just covered these 2 points from that section. Next, section number 24. Okay, first of all we'll cover this appointment of RP. Now under section 21, the committee of creditors has been framed. Now once the committee of creditors has been framed, the first duty that the committee of creditors has to do is they have to appoint a resolution professional. Okay, till now in the company there is interim resolution professional. Now after framing committee of creditors, in their first meeting which will be conducted within 7 days, they have to appoint a resolution professional. Now the committee of creditors are having 2 options. If they want, they can appoint the interim resolution professional himself as a resolution professional, or they can appoint some other person as a resolution professional. Let us see. In the first meeting of committee of creditors held within 7 days of constitution by voting of 66%. Okay, for appointing resolution professional, the voting requirement is 66%. They can do either of 2. First one is appoint interim resolution professional himself as a resolution professional. If they choose this option, in that case they have to communicate it to interim resolution professional, corporate debtor and adjudicating authority. Okay, they have to communicate to interim resolution professional, adjudicating authority and corporate debtor that we have elected to appoint this interim resolution professional himself as a resolution professional. Okay, they don't want to appoint interim resolution professional. They don't like this interim resolution professional. They want to appoint some other insolvency professional as a resolution professional. In that case, replace interim resolution professional with a new resolution professional. For that, file application with adjudicating authority to replace interim resolution professional with resolution professional. See, if they want to replace this interim resolution professional with a new resolution professional, then they have to make an application to the adjudicating authority asking adjudicating authority to appoint a new resolution professional. In this application, they have to mandatorily propose the name of proposed resolution professional. Okay, now once the application is made to the adjudicating authority will forward the name to the IBBI for its confirmation. Okay, now the IBBI has to check whether any legal proceedings are pending against this proposed resolution professional. If there are any legal proceedings pending, then it will reject the application. If there are no legal proceedings pending, it will accept the application. Now this acceptance or rejection has to be given within 10 days of forwarding the application to the IBBI. Now once the IBBI confirms the application, that is allows the corporate debtor to appoint the proposed resolution professional, in that case adjudicating authority shall appoint the same proposed resolution professional as a resolution professional of the CARP. In case doesn't confirm, what if IBBI does not confirm the proposed resolution professional? In that case, interim resolution professional himself will act as a resolution professional till the time the IBBI confirms the name. Hope that is clear. That was regarding appointment of resolution professional. Now we will see section number 24, meetings of committee of creditors. See, once the committee of creditors is framed, why the committee of creditors is framed? It is framed to take the decisions relating to the corporate debtor. Okay, now there is no board of director. Now no board of directors. If board of directors were there, board of directors used to pass the resolutions, but here board of directors were suspended. So committee of creditors is framed where committee of creditors will pass the resolutions. Now if it wants to pass the resolution, it has to conduct the meeting. Now the meeting can be either in person or in electronic mode. You can conduct the meeting through audio visual means, there would be no issue. And the meeting shall be conducted by the resolution professional. Now the resolution professional is appointed in the company. Okay, since the committee of creditors has been framed, the committee of creditors have appointed the resolution professional. So from now, whatever the activities will be conducted by resolution professional only. There is no interim resolution professional now. And for conducting the meeting, you have to send the notice of the meeting. To whom you have to send the notice? The notice of the meeting has to be sent to members of committee of creditors. Okay, we have discussed who will be the members of committee of creditors. To all those members, you have to send the notice of meeting, and also to the members of suspended board of directors also you have to send the notice of the meeting. And to the operational creditor, if the amount owed is more than 10% of total debt. Okay, let's say there is a particular operational debtor. Now the amount owed by the corporate debtor to such operational creditor is 10% or more than 10% of the total debts of the corporate debtor. Let's say total debts of this corporate debtor are some 100 crores. Now of this 100 crores, corporate debtor owes 20 crores to single operational creditor only. That means 20% are being owed to single operational creditor, which is more than 10%. Therefore the notice of the meeting should be sent to even such a type of operational creditor also. He will not be forming part of a committee of creditors, but the notice has to be sent to him, and he can attend the meeting, but he cannot vote in the meeting. Okay, he can just attend the meeting. Hope that is clear. Next, each creditor shall vote according to his voting share. Okay, as per his voting share, he will vote. How the voting share will be decided? It will be decided based on the amount of debt due to him. Okay, let's say total debt is 100 crores. Of this 100 crores, 30 crores is due to some particular debtor. In that case, 30% of voting share is given to him. 20 crores is given owed to some other creditor. In that case, 20% voting share is given to such creditor. Like this, the voting share will be decided. After that, quorum for the meeting. If the committee of creditors meeting has to be conducted, there must be quorum. What is the quorum? Members holding at least 33% of the voting rights should have attended the meeting. Only in that case you can start the meeting. Otherwise you cannot start the meeting. You have to adjourn it. Next, any resolution in the meeting of committee of creditors shall be approved by 66% of voting share. Okay, for a resolution to be approved by the committee of creditors, the voting share required is 66% of voting share. Hope that is clear. Next, section 22 we have completed. Section 23, committee of creditors have appointed resolution professional. Now resolution professional has to now conduct CIRP and manage the affairs of corporate debtor. Okay, now the entire company will be in the hands of resolution professional. Till which time the resolution professional has to manage the affairs of the company? Till any of these two happens. First one is till the time resolution plan is approved. Once the resolution plan is approved, then the resolution professional will go out of the company. The resolution plan will be implemented in the company. Or liquidation order is passed. The CIRP has become a failure. Okay, the company was not able to be survived in this CIRP process. No resolution plan came to the company. In that case, a liquidation order will be passed against the company if no resolution plan was received by the company, by the corporate debtor, not company, corporate debtor. That is section number 23. Section 25. What are the duties of resolution professional? See, the first duty of resolution professional is to take custody of all the assets. Afterwards, raise interim finances. If he want, for conducting the business of the company, if he want, he can raise the loans from the banks. That is interim finances. Afterwards, appoint accountants and other professionals for purpose of conducting the business of the company. He can also appoint employees of the company. Afterwards, maintain list of claims. Then convene and attend meeting of committee of creditors. He should convene the meeting of committee of creditors and he should also attend it. Afterwards, prepare information memorandum. This information memorandum is very important. I'll explain you about that. He should prepare the information memorandum. After that, invite prospective resolution applicants. See, information memorandum. What is the information memorandum? Basically, this information memorandum contains all the particulars relating to the company. Okay, all the business aspects and all the financials and entire data relating to the company will be, compiled into this information memorandum. Who will prepare this information memorandum? Resolution professional will prepare this information memorandum. Why this information memorandum is prepared? Because this information memorandum will be given to the resolution applicants. Who are these resolution applicants? See, to understand resolution applicants, I'll tell you an example so that you will be able to understand it. The real life example. There was a company by name Ruchi Soya. In the 2 years back, the company share has risen from 40 rupees to 1000 rupees. Okay. Now, this Ruchi Soya have become insolvent. CARP was initiated against this Ruchi Soya. Okay. CARP was initiated. Once CARP is initiated means the resolution professional will be appointed, committee of creditors will be formed, and the claims will be received. All that will happen. All that has happened. After happening that, the final part of this corporate insolvency resolution process will be preparation of information memorandum. Not the final part. Information memorandum, the important part. Information memorandum. Okay, the information memorandum of Ruchi Soya was prepared by resolution professional of Ruchi Soya, and it was given to resolution applicants. Who are the resolution applicants? Resolution applicants are the persons who prepare resolution plan to the company. Now, in this case, in the case of Ruchi Soya, the Patanjali Group was the resolution applicant. There are many other companies, but it became successful bidder, Patanjali. Okay. Apart from Patanjali, there were some other companies. I don't exactly remember their names. Let us take, for example, X Limited, Y Limited. These are also resolution applicants. Now, this information memorandum is there now. It will be shared to these companies, to this they will be called as resolution applicants. Now, based on this information memorandum, what they will do is they will prepare a resolution plan. Okay, Patanjali will prepare a resolution plan. This X Limited also will prepare a particular resolution plan. This Y Limited will also prepare some particular resolution plan. Now, these resolution plans are there now. All these resolution plans will be placed before committee of creditors. Now, if committee of creditors approves any of these resolution plans, then that would be the successful resolution plan that would be implemented in the company. Basically, the resolution plan will means what will be there in resolution plan is, resolution plan contains how much amount will be paid to operational creditors, how much amount will be paid to financial creditors, and how this company will carry on the business of corporate debtor. In this case, Patanjali Group is there now. Patanjali Group's resolution plan was approved by the committee of creditors of Ruchi Soya. Okay, once they have approved, this Ruchi Soya is there now. This company was handed over to Patanjali Group, and Patanjali Group started taking over of business of Ruchi Soya and started conducting the business of Ruchi Soya, and Patanjali has repaid the operational creditors and financial creditors of Ruchi Soya. Okay, see, this is how it works. In this case, Patanjali, X Limited, Y Limited, all these will be known as resolution applicants because they are submitting a resolution plan. As per resolution plan, they want to take over the corporate debtor. Simply, they are trying to take over the business of corporate debtor. Okay. In this way, the company which was on the verge of insolvency was survived by Patanjali Group. Okay. Like this, there are many examples. Many companies which are on the verge of insolvency were taken over under this corporate insolvency process by various resolution applicants, and they were successful in managing those companies. Next, that is the purpose of information memorandum. Okay, because this resolution applicant will not be having any idea of business of the Ruchi Soya. They need to get some idea of the business of Ruchi Soya to prepare a resolution plan. How they will get the idea? They will get the idea from seeing this information memorandum. That is the reason why information memorandum is prepared. Okay. Yeah. And invite the prospective resolution applicants to submit their resolution plans. That was section number 25. Section number 25A, which says financial creditor can appoint authorized representative. See, in the committee of creditors, there will be financial creditors. Now, these financial creditors can authorize any person on behalf of this financial creditor to represent this financial creditor in the committee of creditors. Okay. Now, what is the duties of this authorized representative of the financial creditor? That is dealt by section number 25A. Let us see. The first duty of this authorized representative of financial creditor is to participate and vote in the meeting of committee of creditors on behalf of financial creditors. Okay, whatever the financial creditor says, as per that direction, the authorized representative has to act and vote in the committee of in the meeting of committee of creditors. That is the first duty. Next, circulate agenda and minutes to the financial creditor. See, for the meeting of committee of creditors, there will be some agenda, and after completion of the meeting, the minutes will also be prepared for the meeting. Now, these both agenda and minutes has to be submitted by the respective authorized representative to his financial creditor who has appointed him. Okay, such a submission has to be made by the authorized representative to his financial creditor. Hope that is clear. That is to his principal who has appointed him as a authorized representative. Next, do not act against the interest of financial creditor. Okay, this authorized representative of financial creditor has to act as per the interest of the financial creditor. He should act for the benefit of the financial creditor. Hope that is clear. Next, single person can represent several financial creditors. Okay, various financial creditors together can appoint particular person as their authorized representative. There is no prohibition on such appointment of a single person as a authorized representative by various financial creditors. Hope that is fine. Next, vote as per instruction of financial creditor. The authorized representative has to vote as per the direction given by the financial creditor. That was section number 25A. Next, section number 27. Replacement of resolution professional by committee of creditors. See, first of all, in the first meeting of committee of creditors, they have appointed a resolution professional. Now, they are not liking this resolution professional. They feel that this resolution professional is not having any knowledge of this CIRP process. They want to replace this resolution professional. They are not liking this resolution professional. Now, tell me whether they can replace this resolution professional or not. Yes, they can replace, but they can remove with 66% voting of committee of creditors. Okay, if 66% of committee of creditors together decide that we want to remove this resolution professional, they can do so. Now, after removing, they have to appoint a new resolution professional in his place. Now, proposing the name of this new resolution professional, an application has to be made to the adjudicating authority by committee of creditors. Okay, proposing the name of the new resolution professional. Now, the same entire thing will repeat. The adjudicating authority will forward the application to IBBI. Now the IBBA will check whether there are any proceedings, legal proceedings pending against this resolution professional. If there are any legal proceedings, it will not accept the application. If there are no legal proceedings, it will accept the application, and he will be appointed as a resolution professional of the corporate debtor. That is section number 27, replacement of resolution professional by corporate debt committee of creditors. Section number 29, I have already explained you this, preparation of information memorandum. Who will prepare information memorandum? Resolution professional will prepare the information memorandum. What will be present in this information memorandum? All the details relating to company will be present in this information memorandum. To whom this information memorandum will be given? It will be given to the resolution applicants. Who are resolution applicants? Resolution applicants are the persons who will give a resolution plan to the company. Okay, let us see. Resolution professional shall prepare information memorandum, provide information memorandum to resolution applicants. Okay, and resolution applicants based on information memorandum prepares resolution plans. Next, section number 29, persons not eligible to act as resolution applicants. That means, see, this for the purpose of submitting resolution plans, there will be various resolution applicants. Various resolution applicants will come forward like this to submit the resolution plan. Now they should have some eligibilities. Okay, if they don't possess these eligibilities, or they possess any of the disqualification, they cannot act as resolution applicants. Let us see what are the eligibilities of those resolution applicants. This one, section number 29A, persons not eligible to act as resolution applicants. First one, undischarged insolvent. If such person is a undischarged insolvent, then he cannot act as a resolution applicant. See, you should not confuse between resolution applicant, resolution professional, insolvency professional, interim resolution professionals. There are various terms which sounds alike. You should understand the meaning of all these terms. You should not confuse between these terms. Okay, here we are speaking about resolution applicant. Now the resolution applicant should not be a undischarged insolvent. If he is undischarged insolvent, he cannot act as a resolution applicant. He should not be a willful defaulter like Vijay Mallya, Nirav Modi. All those people cannot be a resolution applicants. Next, loan taken classified as NPA. Let's say this resolution applicant has taken a loan. Let's say they have taken loan from SBI Bank. Now they have failed to repay the loan. As a consequence, such loan was classified as NPA, non-performing asset. In that case, this person cannot act as resolution applicant. Hope that is clear. Disqualified to act as a director. That is, under section 164 of Companies Act 2013, there is a list of disqualifications. If the person fits into any of those disqualifications, he cannot act as a resolution applicant. Hope that is clear. Next, prohibited by SEBI. See, SEBI might prohibit some persons from accessing the stock market, from trading in the stock market. Even those persons cannot act as resolution applicants. Convicted for offense. If for the offense is relating to any of the act that is contained in 12th schedule, then the imprisonment should not be more than 2 years. If the imprisonment is for more than 2 years in relation to the offenses covered under 12th schedule, then he cannot act as a resolution applicant. For other offenses which are not covered under 12th schedule, the imprisonment should not be more than 7 years. If the imprisonment is for more than 7 years, in that case he cannot act as a resolution applicant. Hope that is fine. Next, 1 second. Yeah, section number 30, submission of resolution plan. Who will submit the resolution plan? Resolution applicant will submit the resolution plan. On which basis he will submit the resolution plan? On the basis of information memorandum, he will submit the resolution plan. Let us see. Submission of resolution plan by resolution applicant to resolution professional. resolution plan will be submitted by resolution applicant to resolution professional along with affidavit that he is not disqualified under section 29A. Here we have seen the disqualifications of resolution applicant. Along with the resolution plan, resolution applicant should also give a affidavit stating that he is not disqualified to act as resolution applicant as per section 29A. Okay, such affidavit must be given along with the resolution plan. Next, once this resolution plan is submitted to the resolution professional, the resolution professional has to check whether the resolution plan contains following or not. What are they? The resolution plan, see, I will read it. Resolution plan, resolution professional shall check that plan provides for payment of corporate insolvency resolution process costs. Okay, all the costs that are incurred by the corporate debtor for conducting this corporate insolvency resolution process will be paid by the resolution applicant. Okay, such clause must be present in the resolution plan. Or how the resolution applicant is going to pay off the cost relating to this CARP process. Such clause must be present. And the resolution plan should also provide for payment of operational creditor and financial creditor. Okay, how much amount they are going to pay to the operational creditor? They means the resolution applicant. Okay, how much amount the resolution applicant will pay to the operational creditor and to the financial creditor, that must be present in the resolution plan. And management of affairs of corporate debtor. Once this resolution plan is approved, how the business of this corporate debtor will be conducted by resolution applicant. What are the plans of resolution applicant to take over the business of this corporate debtor? Such plans must also be present in the resolution plan. Next, implementation of the plan. Okay, how are they going to implement this plan? Okay, what is the step-by-step manner in which they are going to implement this plan should also be present in the resolution plan. And this resolution plan should not contravene any law. Okay, it should be as per the law. Hope that is clear. Once this resolution plan is submitted by resolution applicant to the resolution professional, what resolution professional will do is, resolution professional will submit this resolution plans to committee of creditors. Okay, he will keep this resolution plans in the front of committee of creditors, in the meeting of committee of creditors. Now the committee of creditors have to approve the resolution plans. How they will approve? By passing a voting share of not less than 66% of voting. Okay, with 66% of voting, they have to approve this resolution plan. Let us see. Resolution plan must be approved by 66% of committee of creditors. Once 66% of committee of creditors have approved the resolution plan, such approved resolution plan will be forwarded to adjudicating authority. Even adjudicating authority should also approve the resolution plan. See how many approvals it is required. First, it has to be given to the resolution professional. Resolution professional will forward to the committee of creditors. Committee of creditors with 66% of voting have to approve the plan, and such approved plan has to be forward to the adjudicating authority, and the even adjudicating authority should also approve it. See, forward to the adjudicating authority. Adjudicating authority can either approve it or reject it. If adjudicating authority approves the plan will be binding on all the parties involved. Who are the parties involved? Corporate debtor, directors of corporate debtor, operational creditors, financial creditors, and central government, state government, employees of the corporate debtor. All the persons who are connected with the corporate debtor should bind to the plan. Okay, the plan will be binding on all those people once the plan is approved by the adjudicating authority. Next, the moratorium shall cease. Okay, once the resolution plan is approved, the business of this corporate debtor is going to be forwarded to the resolution applicant. That means a fresh people are going to manage the company. Okay, so the moratorium that was implemented at the time of starting of corporate insolvency resolution process will come to an end. Okay, and resolution applicant shall obtain necessary approvals within 1 year. See, approvals means, for example, just an example. Now the corporate debtor is being taken over by the resolution applicant. Here, Competition Act. Under Competition Act, if there is any combination, you have to take approval under section 5. If those conditions are met, you have to make application with Competition Commission of India, and you have to take approval of Competition Commission of India. If at all, if this merger or if this takeover of corporate debtor by the resolution applicant is falling in those limits, then the resolution applicant have to apply to CCI and should take the approval of CCI for taking over of this corporate debtor. If at all any such approvals are required, those have to be taken within 1 year. See, resolution applicant shall obtain necessary approvals within 1 year. Within 1 year of approval by adjudicating authority. Okay. Next, rejected. If adjudicating authority has rejected the resolution plan, in that case, order of liquidation will be passed against the company. Okay. The company cannot be saved through this resolution plan. This resolution plan is not sufficient. Okay. In that case, if that is felt by the adjudicating authority will reject the resolution plan and will pass an order of liquidation against the corporate debtor. That is the completion of corporate insolvency resolution process. Now, in the next step, we will be dealing with the continuation of liquidation. Okay. Once the order of liquidation has been passed against the corporate debtor, how the liquidation will be conducted, that we will see in the next class. Okay. In this video, we will be discussing the concept of liquidation under IBC. Basically, if you see, there are two types of liquidations. The first one is liquidation by order of tribunal, which will be dealt in the Companies Act. Okay, in the Companies Act, under the chapter of winding up, the concept relating to liquidation by order of tribunal will be dealt. But in the IBC, the type of liquidation covered is liquidation of a company due to its inability to pay off debts to its creditors. Such type of liquidation will be dealt in the Insolvency Bankruptcy Code. Okay. See, this type of liquidation, that is liquidation by order of tribunal, is covered under Companies Act. The IBC deals with liquidation due to inability of company to pay off its debts. In the previous video, we have discussed that if the resolution plan is approved by adjudicating authority, in that case the plan will be implemented. In case the resolution plan is rejected by the approving authority, the option available is passing a liquidation order against the company, against the corporate debtor. That we will be seeing now. 1 second. Yeah. Under IBC, section number 33 to 54 deals with liquidation concept. Starting with section number 33. Section number 33 deals with what are the situations in which liquidation can be initiated against the corporate debtor. Basically, there are 4 situations in which liquidation can be initiated against the corporate debtor. Let us see them. The first situation is resolution plan is not received. CIRP is initiated against the corporate debtor, and all committee of creditors is framed, and the resolution professional is appointed. This resolution professional has prepared an information memorandum. Now, this information memorandum has to be submitted to the resolution applicants, and resolution applicants will give the resolution plan. There were no resolution applicants who were ready to give resolution plan to this corporate debtor. In that case, the option available is to pass a liquidation order against the corporate debtor. That is the first situation in which liquidation order will be initiated against the corporate debtor. Second situation, committee of creditors or adjudicating authority rejects the resolution plan. Resolution plan is received, but this resolution plan is not accepted by either committee of creditors or not accepted by either adjudicating authority. Even in these two cases also, an order of liquidation will be initiated against the corporate debtor. 1 second, let me see whether the video is recording or not. Otherwise, yeah, fine. That is the second situation in which the corporate debtor, the liquidation of corporate debtor will be initiated. Third situation, during CARP, committee of creditors by 66% of voting decide to liquidate corporate debtor. Okay, the corporate insolvency resolution process is going on. During this process, suddenly the committee of creditors feels that we are unable to resolve the insolvency of this corporate debtor. There is no other option to resolve the insolvency of this corporate debtor. The only option available is to liquidate the corporate debtor and to distribute the proceeds of liquidation among ourselves. If committee of creditors feels so, then they can, by a voting share of 66% voting, they can pass a resolution to liquidate the corporate debtor. In that case also, the adjudicating authority will pass an order of liquidation against the corporate debtor. That is the third situation. Fourth situation, approved resolution plan is contravened. Okay, under CIRP, resolution plan was approved, but during the implementation, this resolution plan was contravened by either financial creditor or corporate debtor. Even in that case also, the adjudicating authority will pass an order of liquidation against the company. Okay, in these four cases, adjudicating authority can pass an order of liquidation against the company. Now, once the liquidation order is passed, along with the order of liquidation, moratorium period will also be implemented on the company. The moratorium period that we have already discussed in the previous video, that is halt on some of the activities, stoppage of some of the activities. During this liquidation proceedings time also, this moratorium period will be implemented on the corporate debtor. Next, after moratorium period, section number 34, that is order of liquidation is passed. Who will conduct the liquidation? There should be some person to conduct the liquidation. Liquidator will conduct the liquidation of the company. Now, liquidator should be appointed. Who will be appointed as a liquidator? In the company, there is already corporate during the corporate insolvency resolution process, a resolution professional was appointed. Now, this resolution professional will himself act as the liquidator of the company. Okay, this will be the general case. But if adjudicating authority wants to replace this resolution professional, okay, adjudicating authority feels that this resolution professional is not having experience to conduct the liquidation, or there are some other situations that will be dealing with. If the adjudicating authority feels so, then it can appoint some other person other than this resolution professional as a liquidator, provided that, see, the resolution professional under CIRP becomes liquidator under liquidation also, provided that he should give a written consent stating that I am agreeing to act as a liquidator also for your company. Such written consent must be given. Now, unless replaced by adjudicating authority, if adjudicating authority wants, it can appoint a person other than resolution professional as a liquidator. Now, what are the situations in which adjudicating authority can replace? First situation, resolution plan submitted by resolution professional was rejected by adjudicating authority. Okay, the resolution professional has submitted a resolution plan to the adjudicating authority. This resolution plan was not accepted by adjudicating authority. In that case, adjudicating authority can appoint some other person other than this resolution professional as a liquidator. Okay, that is the first situation. Second situation, IBBA recommends to replace, that is Insolvency Bankruptcy Board of India doesn't want to continue this resolution professional as a liquidator. Even in that case also, a person other than resolution professional can be appointed as a liquidator. And the final case is fails to submit written consent. Here we have discussed that if resolution professional wants to continue as a liquidator, he should give a written consent. If he fails to give a written consent, even in that case also, the liquidator, a person other than resolution professional, will be appointed as a liquidator of the company. Hope that is clear. Now, in these three cases, adjudicating authority may direct IBBI to propose another insolvency professional as a liquidator. Okay, they don't want to appoint the existing person as a liquidator. In that case, adjudicating authority will ask the IBBI to propose a name of a person who should be appointed as a liquidator for the company. In that case, IBBI will propose the name within 10 days. Such person will be appointed as liquidator of the company. Hope that is clear. The IBBI shall within 10 days recommend the name. Next, eligibility of the liquidator. If you remember, under IBC also we have seen the eligibility of a resolution professional. The main eligibility is he should be independent of the corporate debtor. The same point will be applicable even in case of liquidator also. This liquidator should also be independent of the corporate debtor. For independence, there is some definition given. What is the definition? He should not be relative of the corporate debtor. He should not be employee, promoter or partner of any audit firm, cost audit firm or secretarial audit firm of the company, or he should not be partner, proprietor or a member of any legal firm which is having a transaction of 5% of its gross turnover. Such points of eligibility we have discussed in a previous video. Same points will be applicable even for this liquidator also. Okay, next, powers of board of directors will be vested with the liquidator. Okay, all the powers of board of directors will be vested with the liquidator. He has to conduct the business of the company till the time the liquidation is completed. Okay, once the liquidation is completed, company will no longer be there. Next, fee to the liquidator shall be paid from the proceeds of the liquidation estates. Okay, that was section number 34. Moving to section number 36, formation of liquidation estate. What is this liquidation estate? See, liquidation order is passed against the company. Once the liquidation order is passed, what is the purpose of liquidation order? The purpose of liquidation order is to sell off all the assets of the company and with the proceeds received repay the liabilities of the company. Simply you can say that under liquidation you want to clean up the balance sheet. That means you want to remove all the assets from the balance sheet, you want to remove all the liabilities of the balance sheet. Balance sheet should be empty. Okay, once the liquidation is completed, balance sheet will be empty. There will be no assets, there will be no liabilities. Now, for conducting liquidation, a liquidation estate should be formed. What will be there in this liquidation estate? All the assets of the company will be included in this liquidation estate, and this liquidation estate will be sold to some person, and the proceeds received from such sale will be used to repay the liabilities of the corporate debtor. Now, what will be included in this liquidation assets? Liquidation estate. Which type of assets will be included in this liquidation estate? Let us see. First, we will see what will be included. After that, we will see what will be excluded. First one, assets included. All the assets owned by the corporate debtor. Okay, what are all the assets that are owned by the corporate debtor will be automatically included in the liquidation estate. Okay, assets owned but not in possession of the corporate debtor. Okay, even the assets which are owned by the corporate debtor but they are not in the possession of corporate debtor, they are in the possession of some other people, even those assets also should be included in this liquidation estate. Okay, all tangible, intangible, movable, immovable, whether the asset might be tangible or intangible, movable or immovable, they must be included in this liquidation estate if those assets belongs to corporate debtor. Okay, next, assets subject to ownership determination by court. That means assets which are under litigation, you can simply call as litigation assets. Even those assets which are under litigation should also be included in this liquidation estate. Liquidation estate. This fourth point is very important. Okay, you might think that assets which are under liquidation should not be included in this liquidation estate. Even those assets should also be included in the liquidation estate. You should remember that. After that, assets involved in avoidance transaction. We will see what are the avoidance transaction. There are basically 4 types of avoidance transactions that we will be discussing at the end of the video. Okay, even those assets should also be included in the liquidation assets. Assets which are involved in avoidance transaction. After that, assets on which security interest is relinquished. See, let's say this corporate debtor has taken some loan from a bank. Now, for this loan, he would have given some security. That is, let's say he has given some land as a security. Now, the liquidation is going on against this corporate debtor. Liquidation is going on means all the assets of corporate debtor will be sold. Now there is this land which has been given as a security to the some creditor. Now this creditor will be having a option. What the option having to the creditor is, the first option is, if he wants, he can relinquish his interest on that security asset and he can include such security such asset into the liquidation estate. That means simply the asset is given as security to him. Now what he can do is he can revoke the security of the asset and such asset will be included in the liquidation estate. Once the liquidation estate is sold, some amount will be received towards that asset. Such amount will be repaid to that creditor. That is the first option available to the secured creditor. That is to relinquish the interest against the secured asset and mix it up with the liquidation estate. The second option is he will not relinquish the interest of such security asset. He will keep the asset with himself only and he himself will sell the asset and he himself will take the proceeds received from such sale of that security asset. If at all the proceeds received are surplus of debt owed to him, in that case such a surplus amount will be given to the liquidator. Hope that is clear. Now in this case, in the first option, the secured creditor has relinquished his security interest on the asset. Now even such type of asset should also be included in the liquidation estate. If you understood this point, it is okay. Otherwise there is a separate section on this point that we will be discussing in the next coming video. Okay, at that time you can understand. Even such assets on which security interest is relinquished should also be included in this liquidation estate. If you want, you can mark this up. Within 10 to 15 minutes we will discuss that point. At that time you can clearly understand it. If it is understood now, it is okay. And all proceeds realized in liquidation. Okay, even all proceeds realized in liquidation should also be included in the liquidation estate. What are the assets that should be excluded from the liquidation estate? There are 4 types of assets that should be excluded from the liquidation estate. First one is assets in possession of corporate debtor but owned by some third party. Okay, assets which are owned by third party but which are in the possession of corporate debtor should not be included in the liquidation estate. They belongs to some third party. They don't belong to corporate debtor. Okay, they should be excluded. Next, assets in security collateral subject to set off. Okay, the corporate debtor has taken some loan. For such loan, he has given the asset as a security. Now the asset, the corporate debtor have also not repaid the loan. Now the amount of the loan and the amount that will be realized on the asset are both equal. They both can be setted off. In that case, such type of asset should also not be included in the liquidation estate. Hope that is clear. Next, personal assets of shareholder partner of corporate debtor. Why would you include personal assets of the shareholders and the partners of the corporate debtor? They belongs to their own. Okay, they are those their personal assets. They should not be included in the assets of the corporate debtor. Okay, fine. Next, assets of subsidiary of corporate debtor. Why will you include assets of subsidiary company of corporate debtor into the assets of corporate debtor? Okay, corporate debtor is being liquidated, not the subsidiary. Subsidiary will continue as it is, but the corporate debtor will be liquidated. Thereby you should not include assets of subsidiary in the liquidation estate of the corporate debtor. However, you can include the shares that are held by this corporate debtor. Okay, the shares of subsidiary held by the corporate debtor can be included in the liquidation estate, but you should not include assets of the subsidiary. Shares of the subsidiary to the portion held by the corporate debtor can be included in his liquidation estate, but assets of subsidiary should not be included. Hope that is clear. Note, liquidator shall prepare asset memorandum within 75 days from the liquidation commencement date. Okay, within 75 days from the date of commencement of the liquidation, liquidator should prepare a asset memorandum. What will be there in the asset memorandum? All the list of assets and where are these assets located and how much value can be realized from these assets. All those will be present in this asset memorandum. Such asset memorandum must be prepared within 75 days. Hope that is clear. Next, section number 37, sources to access the information by liquidator. Now, liquidator has to prepare this asset memorandum, and he has to sell the assets of the company, and he has to repay the liabilities of the company. How will this liquidator know what are the liabilities that are having against the corporate debtor and what are the assets of the corporate debtor? For knowing this information, he can take help of the following. Okay, that means from the following sources, he can gather the information relating to the corporate debtor which is under liquidation. What are the sources? First source, information utility. In the information utility, all the financial creditors who have given the loan to corporate debtor would have filed the details relating to the loan. Even operational creditors will also have filed the details relating to the loan. Such information can be accessed from the information utility relating to the corporate debtor under liquidation. That is the first source of information. To whom? To liquidator. Next, credit information systems. Example is CIBIL. Even from the database of CIBIL also you can gather information relating to corporate debtor. Agencies of central government, state government. Okay, if any agencies of the central government or state government are also having data relating to corporate debtor, you can access such information. Who? Liquidator can access information. Database of IBBI and information systems maintained under any other law. If under any other law they are maintaining any data, the information systems relating to the assets, liabilities of the corporate debtor, liquidator can access such information and gather the information relating to assets, liabilities of corporate debtor which is under liquidation. Now, once he gathers the information, creditors may request this information from liquidator and same has to be furnished within 7 days. Okay, the liquidator has gathered all this information. Now, this information can be asked by the creditors. Okay, now this if creditors ask for this information which the liquidator has gathered, liquidator must furnish the information to creditors within 7 days. Hope that is clear. That was section number 37. Moving to section number 38, which deals with consolidation of claims. Now, who will submit the claims? Submission of claims by financial creditor, operational creditor. To whom they will submit the claims? To liquidator they will submit the claims. Within how many days they have to submit the claims? Within 30 days from the date of commencement of liquidation, they have to submit their claims to the liquidator. Along with the claims, financial creditor has to submit record of information utility, if any. Okay, if the record relating to this loan given by the financial creditor to corporate debtor is available with the information utility, such record also be submitted to the liquidator. If there is no record, it is not required to be submitted. That is the reason why you can find there if any. And in case of operational creditor, along with the claim, he should submit the supporting documents relating to confirmation of the claim. Okay, to whom they will submit? To liquidator they will submit. That is section number 38. Now, once they are submitted to the liquidator, what liquidator will do? Liquidator will verify the claims within 30 days from the last date of submission of claims. Okay, within 30 days he has to verify whether the claims submitted by this creditors are correct or not. Okay, that is covered under section number 39. Now, after verifying the claims, liquidator can either admit the claim, reject the claim, or partly admit the claim. Partly admit the claim. That is covered under section number 40. Now, against the order of this liquidator, appeal against order of liquidator by creditor to adjudicating authority can be filed within 14 days. Now, liquidator has rejected particular creditor's claim. Now, creditor can file an appeal against this decision of liquidator with the adjudicating authority within 14 days. That is covered under section number 42. Next, note, creditor can alter his claim within 14 days. See here, financial creditor and operational creditor have within 30 days submitted the claim. Now, such a submitted claim, if they find that there is something wrong in the claim, they can alter the claim within the 14 days. Okay. Next, section number 43. Preferential transactions and extortionate credit transaction by corporate debtor. This concept is important. I will go a little bit slow here. Okay, so you please concentrate and listen. Section number 43. It deals with preferential transactions. What is meant by a preferential transaction? First of all, we will understand that preferential transaction means corporate debtor has transferred property or interest to creditor, security, guarantor on account of financial or operational debt taken. Okay, see, corporate debtor has taken some loan from the creditor. Now he was not able to repay the loan. Against this loan some security was given. Since he was not able to repay the loan, he has transferred this asset to the particular creditor. That is the situation. Now, when did this transfer taken place? This transfer has taken place to whom this transfer has taken place? This transfer has taken place to related party. Okay, you have transferred this asset to a related party. Basically, you have taken a loan from the related party. You are not able to repay the loan. That is the reason why you transferred the asset to the related party. If you have transferred the related party during preceding 2 years before insolvency commencement date, okay, you have transferred the asset to the related party against the not repayment of debt during 2 years preceding the commencement of insolvency resolution process. That is in case of related party. In case you transfer the asset to person other than related party, you have transferred during preceding 1 year before commencement of insolvency resolution date. Okay, if you have transferred to related party, you should check during 2 years whether you have transferred during preceding 2 years. In case you transferred to other than related party, you have to check whether you have transferred during preceding 1 year. Okay, you have transferred during preceding 2 years or preceding 1 year to related party or to other than related party. Now, apart from these two conditions, such a transaction, such a transfer, see, this transaction has given more benefit to creditor than he would have received in case amount is distributed to him as per section 53. See, let me tell you an example. Now, under section 53 means, under section 53, you will be distributing the assets of the company to various people as per the procedure prescribed in 53. Now, you have transferred the asset to the creditor. Let's say the value of the asset is 100 crore. You have transferred 100 crore asset to the creditor. If at all you have not transferred this asset now and you transferred the asset during liquidation under section 53, that particular creditor would have received only 50 crores. But since you have transferred the asset now, you are giving 100 crores. Okay, if you would have not transferred now and during the liquidation under section 53, the particular creditor would have received lesser amount than he has received now. That should be the condition. Okay, in that case, such a transaction would be known as preferential transaction. Okay, hope you understood this. You have to check whether this preferential transaction has taken place during preceding 2 years before commencement of insolvency, in case of related party. In case you transfer to other than related party, you have to check for this whether this transaction has taken place during preceding 1 year only. Okay, and the transaction is transfer of property against the debt. That would be the preferential transaction. Hope this is clear. See, if this type of transaction are noticed by liquidator or resolution professional, he can make application to the adjudicating authority to avoid such transaction. Okay. Corporate debtor has transferred the asset to some person and such transfer has resulted a benefit to such person that has been found by adjudicating authority or liquidator. Now, adjudicating authority, not adjudicating authority, liquidator or resolution professional that has been found by liquidator or resolution professional. Now, the liquidator or resolution professional can file an application to the adjudicating authority asking the adjudicating authority that a particular preferential transaction has taken place in the company. You please reverse the effect of such preferential transaction. You please declare such a transaction as void. You please avoid such a transaction. That would be known as avoidance transaction. Okay. Once such application is made, adjudicating authority also feels that yes, this is a preferential transaction, then it can pass an order to reverse those transactions. Hope that is clear. This is the concept of preferential transaction. This preferential transaction is one of the avoidance transaction. That means if at all this preferential transaction has taken place, it can be avoided by this liquidator or resolution professional once it is found by them. That is the reason why it will be known as avoidance transaction. Hope that is clear. That is the concept of preferential transaction. Next we will be moving to undervalued transaction. Even undervalued transaction is also a type of avoidance transaction. That means if a liquidator or resolution professional finds any of the undervalued transaction has taken place in the corporate debtor, then he can file an application to the adjudicating authority asking the adjudicating authority to declare this undervalued transaction as void. Hope that is clear. Let us see what type of transaction will be covered under undervalued transaction. Under section 45, undervalued transaction means gift given by corporate debtor, or corporate debtor has sold an asset for a price significantly lower than the cost. Let's say corporate debtor has purchased some asset at some 5 crores, but now it is selling that asset for 2 crores only. Okay, if at all the same asset has to be brought from the market, it would cost some 5 to 6 crores, but it is selling at 2 crores. Then that would be undervalued transaction. Simply if this condition is satisfied, it would not be undervalued transaction. Apart from this condition, following condition also should be satisfied. Even in case of preferential transaction also, simply if this condition is the first condition, simply corporate debtor transfers an asset to the creditor, that doesn't mean a preferential transaction. Along with such transfer, this condition of period, such transfer should taken place during the preceding 2 years or preceding 1 year as per the party with whom you are dealing with. And along with that condition, this condition should also be satisfied. If all these 3 conditions are satisfied, only then that would be known as preferential transaction. Even in case of this undervalued transaction also, first of all it should be this kind of transaction. That is first condition. After that, it should have taken place either during preceding 2 years or during preceding 1 year. If it is with the related party, during preceding 2 years. If it is with other than related party, during preceding 1 year. Okay, it should have taken place during that period. And okay, if it has taken place during that period, it would be known as a undervalued transaction. If such undervalued transaction is found by liquidator or insolvency resolution professional, then they can make an application to adjudicating authority to declare such transaction as void and reverse its effect. Now, what if liquidator or insolvency resolution professional failed to make an application to adjudicating authority? In that case, if liquidator fails to file application, then creditor or any other person can file an application to adjudicating authority. Okay, even if liquidator has not filed the application to adjudicating authority against this undervalued transaction, creditor can go and file application to the adjudicating authority against this undervalue transaction. Hope that is clear. Now, if adjudicating authority is also satisfied that yes, this is an undervalue transaction, then it can pass order declaring such transaction as void. Hope that is clear. This is the second type of avoidance transaction, that is undervalue transaction is also a type of avoidance transaction. Next, third type of avoidance transaction, transactions defrauding creditors. See, what type of transactions will be known as transactions defrauding creditors? The first condition is it must be undervalue transaction as per section 45. Okay, for a transaction to be transaction defrauding creditors, in the first place it should be undervalue transaction, and along with this the intention behind such transaction is to defraud the creditors. If these two conditions are satisfied, that would be transaction defrauding creditors. Now, against this transactions defrauding creditors, adjudicating authority can pass an order restoring the position as it existed before transaction was entered. Okay, the adjudicating authority can declare such transaction also as void. Hope that is clear. Next, that was third type of avoidance transaction. Moving to fourth type of avoidance transaction, that is extortionate credit transaction. Means corporate debtor has taken a loan from particular person on exorbitant terms. That means he has taken loan at a huge rate of interest, at a very huge rate of interest. That would be extortionate credit transaction. Even and such transaction must have taken place during the preceding 2 financial years. Okay, during 2 years preceding insolvency commencement date. During that period, the extortionate credit transaction must have taken place. Now, against this extortionate credit transaction, on application made by liquidator or insolvency professional, adjudicating authority can order the following. What? Adjudicating authority can order to modify the terms of such transaction. Okay, or adjudicating authority can order to set aside the debt created. Okay, adjudicating authority can say that you please reverse your positions. Okay, the debt has been taken by corporate debtor, now you give back the amount, and whatever the amount that has been repaid by the corporate debtor, you please give back it to corporate debtor. Like this, the order can be passed by adjudicating authority, that is set aside the debt created or restore the position as existed before. From these 3 orders, any type of order can be passed by the adjudicating authority against extortionate credit transactions. That was section number 50. Next, section number 52. See this point, we have star marked now here. Let me show you. Assets that would be included in liquidation estate. 1 point, yeah, this point. Assets on which security interest is relinquished, that we will be discussing here. Let us see. Yeah, section number 52. Secured creditor in liquidation proceedings. Secured creditor means a particular creditor to whom security of asset is given against the debt taken from him. He would be known as secured creditor. Now, liquidation is going on against the company. During this liquidation, since the company owes some amount to the secured creditor, company should give some amount to the secured creditor. Now, the secured creditor is having an asset as a security with him. Okay, that asset belongs to company. Now, secured creditor is given 2 options during liquidation process. What are the 2 options? The first option is the asset of company is with secured creditor now. The first option given to secured creditor is secured creditor will relinquish his interest on the asset and will submit the asset to the liquidator. The liquidator will include this asset in the liquidation estate. Okay, after including in the liquidation estate, from along with all other assets, he will also sell this asset also. By selling this asset, some amount will be realized. That amount will be given to the secured creditor. That is the first option. Second option is secured creditor will not relinquish the security interest on the asset. He will keep his security interest as it is. Instead, he himself will sell the asset to some third party. Okay, when he sells the asset to third party, he will realize some amount now. That amount, if it is equal to or less than the debt owed by the corporate debtor to the creditor, he will keep that amount with him only. If at all he realizes any surplus amount than the debt owed to him, then such surplus amount will be given to the liquidator. That is, these are the two options that are available to secured creditor in case of liquidation. That is what discussed here in section 52. Hope that is clear. Now, if the secured creditor relinquishes his interest on any asset, such asset should also be included in the liquidation estate. Hope you understood. Final section, section number 53, manner of distribution under liquidation. How you will be distributing the assets? What is the order of distribution of assets during the liquidation? First of all, from the amount realized through liquidation proceeds, you have to pay off the insolvency process cost. Okay, after that you have to treat these both as equally. Whatever the amount you realize, you have to give it equally to these two parties. Who are they? First one, workman dues for preceding 24 months and secured creditor who relinquished his security asset. Okay, you have to treat these both people at par. Okay, equally. You have to divide the amount between these two people. After that, if amount is remaining, unpaid wages, see, okay, after paying to the parties that are covered on point 2, if amount is remaining, you will pay the remaining amount to unpaid wages or dues to employees, workmen for the 12 months. Even after paying that, if amount is remained, you will pay to financial debts of unsecured creditors. Okay, after that you will pay the remaining amount equally to central government or state government, that is taxes. If any amount is due to either central government or state government during preceding 2 years, the amount will be paid to them. And debts owed to secured creditor remaining after enforcing security interest. Okay, after enforcing the security interest, still if any amount is still has to be paid to the secured creditor, now the amount will be paid to the secured creditor. Okay, these two people will be treated equally. The remaining amount will be divided among these two people equally. Even after that, if any amount is remaining, then balance debts, if any are remaining, will be paid off. After that, you will pay off preferential shareholders. After that, you will pay off equity shareholders. By this, you cleaned up the assets, you cleaned up the liabilities, and the final step remaining is to dissolve the company. Dissolution order has to be passed. Under section 54, dissolution order will be passed. After liquidation, liquidator shall make an application to adjudicating authority to pass an order of dissolution. Okay, once the balance sheet is cleaned up, once the balance sheet is emptied, the liquidator will make application to the adjudicating authority, asking the adjudicating authority to pass an order of dissolution. Now, from date of adjudicating authority order, corporate debtor shall be dissolved. That means the existence of corporate debtor will come to an end. After that, forward order of dissolution to relevant authority with whom corporate debtor is registered within 7 days. Okay, within 7 days of order of this dissolution, such order has to be forwarded to the authority with which the corporate debtor is registered. In case of company, it would be MCA. By this, the concept of liquidation under IBC is completed. pre-packaged insolvency resolution process, similar to that of corporate insolvency resolution process. Even this PPIRP is also a particular procedure which is used to resolve the insolvency of corporate debtor. Basically, this concept was introduced in the last attempt only. Previously, this concept was not present in IBC. So this is introduced through amendment. In this video, we will be discussing this entire concept. Before entering into the provisions, basically the provisions relating to this PPIRP, I will be calling it as PPIRP, pre-packaged insolvency resolution process. The provisions related to this PPIRP are present in section number 54A to 54P. Before discussing those provisions, we will first of all understand the background of PPIRP. Okay, what does this PPIRP exactly means, and what is the difference between CARP and PPIRP? See, if you see under CARP, okay, that is corporate insolvency resolution process, which we have already discussed. Under CARP, once the default arises, application is made to adjudicating authority. Okay, you will make the application to adjudicating authority. This is the first step. Once the default arises, the first step is making application to adjudicating authority under CARP process. After that, the resolution, you can say resolution professional is appointed. After that, committee of creditors is framed. After that, information memorandum is prepared. After that, resolution plan is prepared, and once the resolution plan is approved by adjudicating authority, then the CARP process comes to end. This is the flow of CARP. But under pre-packaged insolvency resolution process, pre-packaged insolvency resolution process, see, I will be taking just 15 to 20 minutes. In that 20 minutes time, I will be giving you an idea of this entire PPIRP. After that, we will read the provisions. See, if you observe the word pre-packaged, that means pre means before only everything is packed. Before what everything is packed? Before application is made to adjudicating authority only. Okay, before application to adjudicating authority is being made, everything is packed. What is packed? Appointment of, you can say appointment, selection of insolvency professional, preparation of information memorandum, forming of committee of creditors, and preparation of resolution plan. Everything is, decided, or you can say everything is packed before the application is made to adjudicating authority. Okay, once the corporate debtor and the creditors decide on the person who has to be appointed as resolution professional, and preparation of information memorandum, and preparation of resolution professional, once everything is finalized, once they feel that the resolution plan for this corporate debtor is finalized, then they will make application to adjudicating authority. So the name of this process is pre-packaged insolvency resolution process, because everything has been finalized before application is made to adjudicating authority. Now, once the application is made to adjudicating authority, since everything is finalized, everything is almost done, the work of adjudicating authority becomes easy. Okay, this reduces the time taken by adjudicating authority and the resources required for adjudicating authority to conduct the resolution processes. This is the idea of pre-packaged insolvency resolution process. Now you can get a doubt that why this pre-packaged insolvency resolution process is introduced. Here we are already having a corporate insolvency resolution process. Everyone can use it now. Why again this pre-packaged insolvency resolution process is introduced? There are many reasons. I'll tell you some of the reasons. The first reason, is to encourage corporate debtors to initiate resolution process. See, basically under CARP, who can initiate this CARP application to adjudicating authority can be filed by financial creditor, operational creditor and corporate debtor. But if you observe the statistics, IBC was introduced in 2016. In 2016, number of applications initiated by the corporate debtors were around 80%. I don't remember the figure exactly, but it is around 80%. That means 80% of total insolvency applications that were filed to adjudicating authority were filed by corporate debtor only. Remaining 20% were initiated by financial creditor and operational creditor. But the same figure in 2019 drastically reduced to around 3%. Okay, that means in 2019 of the total applications that were filed to adjudicating authority regarding this initiation of CARP, only 3% were filed by corporate debtors. Remaining 97% were initiated by operational creditor or financial creditors. Now, why these corporate debtors are not initiating insolvency resolution applications? Because once insolvency, the CARP process starts, the management of the corporate debtor will be transferred to resolution professional. Okay, the existing board of directors will be suspended. That means the present management will lose its control over the business of the corporate debtor. Due to this fear, many corporate debtors are not filing applications with adjudicating authority to resolve their insolvencies. Why is it so important to encourage corporate debtors to file applications? Because the fact that there is something fishy going on in the entity, or the fact that the entity will turn into insolvency, is first of all known to corporate debtor himself only. Okay, after corporate debtor knows, after that the third parties knows. Okay, thereby if corporate debtors are encouraged to file or to initiate this CARP processes, you can identify the entities which are under insolvency at earlier stages. Okay, at the earlier stage only you can identify the entities which are under insolvency. That is the reason it is important to encourage corporate debtors to initiate the applications. Thereby, to deal with this, PPIRP was introduced, wherein in this PPIRP, once PPIRP application is initiated, the management of corporate debtor will not be transferred to the resolution professional. The management of corporate debtor will be with the existing management only. Okay, this is the benefit given under PPIRP, thereby encouraging corporate debtors to initiate applications to resolve the insolvency of the corporate debtors. Hope that is clear. This is one of the reasons. Moving to the second reason. The first reason is to encourage corporate debtors to initiate resolution processes. second. I think there is something, some technical issue. 1 second. Okay, let it be. Yeah. Second reason. The second reason is, see, under CIRP, basically during CIRP processes, what was happening was, these financial creditors were there now. See, there is a corporate debtor. This corporate debtor has defaulted, thereby, let's say it has defaulted to financial creditor, thereby this financial creditor has initiated application with adjudicating authority. Okay, once application is initiated with adjudicating authority, then this corporate debtor used to wake up and say, "Arey financial creditor, why are you filing the application with adjudicating authority? Come to me, we'll settle the matter. Discuss with me, we'll settle the matter." Like this, corporate debtor would invite financial creditor for outside of court settlement. Okay, to settle the matter outside of the court. Once the matter is settled outside of the court, financial creditor used to withdraw the application filed by adjudicating authority under section 12A. Under section 12A, basically under section 12A, you can withdraw the application by approval of 90% of committee of creditors. Okay, by utilizing section number 12A, he used to withdraw the application. Why? Because there is a settlement already happened between corporate debtor and financial creditor outside of the court. Now, the adjudicating authority observed this, and this settlement is there now. This settlement is there now. This settlement is not transparent. Okay, they used to reach some settlement, but it is not known to anybody. Okay, what type of settlement they have arrived is not known to anyone. It was not transparent. Thereby, to deal with this, what the adjudicating authority or what IBC has done is, it has introduced PPIRP, wherein basically you can say this PPIRP as a hybrid process. Okay, hybrid. Why I am saying it as hybrid? Because on one hand, it allows settlement among the parties. Okay, on the other hand, it also provides framework for the settlement. Okay, framework for settlement through PPIRP. You settle your issue, there is no problem with that, but you settle your issue as per the law, thereby PPIRP is introduced. Okay, this is another reason why PPIRP is introduced. Moving to the third reason. Because of COVID-19. Another thing I have forgot to tell you here in the first reason, basically this PPIRP application is there now. This can be initiated only by corporate debtor. That we will be discussing in the provisions. But remember that PPIRP application can be initiated only by the corporate debtor. Financial creditor or operational creditor cannot initiate PPIRP application. Only corporate debtor can initiate PPIRP application. Okay. Now the third reason is, due to COVID-19, See, if you observe from March 2020, from March 2020 to March 2021, for all the defaults that has arisen during this period, you cannot initiate CARP. Okay, for the defaults that have arisen during this period, you cannot initiate CARP. During that period, CARP was temporarily suspended. Now, even though you cannot initiate CARP during that period, the fact remains same that there were some companies that that entered into insolvency, that became insolvent. Okay, even though CARP application cannot be initiated during this period, but the fact remains same that there were some companies which have defaulted and which have entered into the stage of insolvency. Now, there is a requirement to resolve this insolvency. Okay, we cannot leave those insolvent entities like that. We have to help them. We have to resolve the insolvency of those entities. But if we encourage application under CARP for those entities, there are large number of entities. There will be many applications that will be filed with the adjudicating authority, and to deal with those applications, the resources available with adjudicating authority will not be sufficient. Okay, that many applications will be filed if they allow to file CARP during this COVID period. Thereby, PPIRP was introduced, wherein in this PPIRP, everything will be decided by corporate debtor and a committee of creditors and the insolvency professional. They will decide everything. They will prepare a resolution plan, and after that they will file application with adjudicating authority, which reduces the work burden on adjudicating authority. Okay, this is also another reason. Still there are many other reasons, but these are the main reasons for implementing PPIRP. This is the idea of pre-packaged insolvency resolution process. Basically, this PPIRP is not a new concept. It is already being followed in various other countries like USA and UK. The same concept is taken by Indians, and some modifications are made as per the Indian business environment, and it has been implemented in India. Okay, and in India, the government is trying to implement this PPIRP in a phased manner. So as of now, this PPIRP is applicable only for MSMEs, and in future it can be made applicable even on other types of entities also. Okay, it is trying to implement this PPIRP in a phased manner. This is the idea of PPIRP. Now we will move into the provisions. Yeah, hope this is clear. Pre-packaged insolvency resolution process, section number 54A to section number 54P. We will read the sections. First section deals with section 54A, corporate debtors eligible for PPIRP. That means, who are the corporate debtors against whom PPIRP application can be initiated. We will see. Against MSMEs, as of now, PPIRP can be initiated only against micro, small and medium enterprises as per MSME Act. As per MSME Act, there is a separate definition, some turnover criteria and asset criteria given for these entities. If they fall within those criteria, then they will be considered as micro, small or medium enterprises as per the criteria prescribed there. Now, the PPIRP can be initiated against MSMEs only as of now, and such MSME has committed a default of minimum 10 lakh. Okay, minimum amount of default required for initiating PPIRP is 10 lakhs. Okay, for CIRP it is 1 crore, for PPIRP it is 10 lakhs. Next, there are certain criteria to be satisfied by this corporate debtor, by this MSME. What are they? Let us see. First one, it is not undergoing corporate insolvency resolution process either present or past 3 years. Okay, this MSME which is filing a PIRP application is not undergoing CIRP process currently, or during the past 3 years it should not have undergone PIRP process, CIRP process. Hope that is clear. Next, not undergone PIRP process during the preceding 3 years. Okay, it should not have undergone PIRP process during preceding 3 years. Next, no order of liquidation passed under section 33. Okay, the MSME against whom the PIRP application is initiated, no liquidation order has been passed against such MSME. Okay, next, such MSME must be eligible to submit resolution plan under section 29A. If you see under section 29A, it speaks about eligibility of resolution applicants. All those criteria must be satisfied even by this corporate debtor also, against whom this PPIRP is initiated. Next, one second. Basically, here financial creditors are there now. They have to propose a resolution professional. See, financial creditors are there now. They have to propose a insolvency professional. See, here they have not used the term resolution professional. They have used insolvency professional. Some financial creditors will propose the insolvency professional. After that, remaining all the financial creditors will approve such insolvency professional to be appointed as resolution professional by 66% of voting share. Okay, that means we have said that pre-pack now. In the pre-pack, some financial creditors will appoint insolvency professional. Once the application is made, then committee of creditors will be there now. They will approve this insolvency professional to act as resolution professional. Hope that is clear. Next, members of corporate debtor passed special resolution to initiate PPIRP. Okay, the members of the corporate debtor should pass a special resolution approving the corporate debtor to file an application for PPIRP with adjudicating authority. Next, declaration by director of corporate debtor. The directors of this corporate debtor must give a declaration. What declaration they have to give? They have to declare that corporate debtor shall file for PPIRP within 90 days. Basically, you remember that this PPIRP application can be initiated only by corporate debtor. Okay, apart from corporate debtor, no one can initiate this PPIRP. Okay, you remember that. Now, PPIRP wants, corporate debtor wants to initiate PPIRP. If it wants to initiate PPIRP, the directors of this corporate debtor should give a declaration. Once they decide to initiate PPIRP, they will approach the financial creditors now, asking the financial creditors. See, corporate debtor will approach the financial creditor and will ask the financial creditor saying that I am not able to repay the amount, so I am in the opinion to initiate PPIRP against me. Okay, like such a decision will be communicated to the financial creditor. Now, for the financial creditor, the directors of corporate debtor have to give a declaration. What type of declaration? Stating that corporate debtor shall file for PPIRP within 90 days. Okay, and PPIRP is not initiated to defraud creditors. This PPIRP application is not to defraud creditors. And name of the insolvency professional. Such a declaration must be given. These are the conditions that the corporate debtor must satisfy. Next, Note: PPIRP can be initiated only by corporate debtor with approval of 66% voting of financial creditors. Okay, with approval of 66% voting of financial creditor, the application for PPIRP can be initiated by corporate debtor. Now, while asking for approval of financial creditors, you will be conducting the meeting of the financial creditors. Now, in that meeting, you have to provide the following documents to the creditors. What are the first one? Declaration by the directors of corporate debtor. We have seen the declaration. That declaration must be provided. Next, special resolution passed by members of corporate debtor. We have seen that if corporate debtor wants to initiate PPIRP, first of all, it has to pass special resolution. It has to take approval through special resolution from its members. Such copy of special resolution must be presented to the financial creditors. After that, base resolution plan prepared by corporate debtor. See, I have told you that everything will be pre-packed. So, corporate debtor only will prepare base resolution plan. We will be calling it as BRP. Base resolution plan will be prepared by corporate debtor only. Okay, in the CIRP, resolution plan will be prepared by resolution applicants, but here resolution plan will be prepared by corporate debtor only. But however, we'll discuss regarding this resolution plan. At that time, you will be able to understand it clearly. And such other documents, these must be presented to the financial creditors for taking their approval. After that, section number 54B, duties of insolvency professional before initiating PPIRP. See, here it is insolvency professional. They have not used the term resolution professional. If you see, the corporate debtor, once it feels that it is in the verge of insolvency, it will approach financial creditor stating that it wanted to initiate PPIRP. Once it approach financial creditor, if they also agree, then they both will, recruit a insolvency professional. Insolvency professional will be recruited by them to help them to prepare for PPIRP. This insolvency professional will help the parties to prepare for PPIRP. Once the application is made to the adjudicating authority, this insolvency professional who have been recruited by these parties will be appointed by them as resolution professional. Okay, hope this is clear. That is the reason why they have used the term insolvency professional. What are the duties of insolvency professional? What happened to this? Yeah. What are the duties of this insolvency professional before initiating PPIRP application? Let us see. First one, prepare a report. What should be there in the report? Corporate debtor meets requirements of section 54A. Under section 54A, we have seen that corporate debtor has to meet some requirements. All that requirements are met by corporate debtor. That has to be checked by the insolvency professional. And base resolution plan conforms to requirements of section 54K. Basically, section 54K provides the requirements of resolution plan. The insolvency professional has to see that the base resolution plan submitted by the corporate debtor is as per section 54K. Okay, that would be his duty. After that, file other reports and documents with the board. Board means IBBI. Perform such other functions as may be prescribed. These are the duties. Next, duties cease. When will these duties stop? Corporate debtor fails to file PPIRP application. Okay, we have seen that within 90 days, corporate debtor has to initiate PPIRP process. If it fails to initiate PPIRP process within 90 days, then the duties of this insolvency professional will come to an end. That is the first case in which duties of insolvency professional will come to end. The second case is PPIRP application has been admitted or rejected by adjudicating authority. If it is admitted, the duties of insolvency professional will come to an end and the duties of resolution professional will start. Okay, if it is rejected, duties of insolvency professional will come to an end. Hope you know the difference between insolvency professional and resolution professional. I have already explained it in the previous video. Next, section 54C, application to initiate PPIRP. Only corporate debtor can initiate application for PPIRP in form 1. Okay, it is very important to note that only corporate debtor can initiate application under this PPIRP. Now, along with the application, there are some attachments have to be provided. What are they? Declaration and special resolution. Declaration by board of directors, special resolution by members. Approval of financial creditors, that is 66% of financial creditors. Next, consent of proposed resolution professional. You have proposed to appoint a particular person as a resolution professional. Na? The consent of such person is also to be given along with the application. Information relating to books of accounts. Okay. Next, declaration regarding existence of avoidance transaction. This avoidance transactions we have discussed in the liquidation part. Basically, there are 4 types of avoidance transactions. If at all corporate debtor feels that if any of these avoidance transactions have been entered, then a declaration has to be given to the adjudicating authority stating that there are no avoidance transaction entered by the corporate debtor. If at all there are any transactions, avoidance transactions entered, what are the transactions and what is the value of those transactions has to be given. Next, once the application is made, adjudicating authority shall within 14 days either approve or reject. If he approves the application, then the PPIRP will commence. That date will be known as date of commencement of PPIRP. If it is rejected, the adjudicating authority must give 7 days, okay, 7 days opportunity to rectify the application. Such opportunity must be given to the applicant. Next, section 54D, time limit for completing PPIRP. Basically, the time limit is within 120 days from the date of commencement. This 120 days can be further divided into 2 parts. From this 120 days, first 90 days is given to submit the resolution plan. Okay, within first 90 days, the resolution plan has to be submitted by the resolution professional. Once the resolution plan is submitted, within next 30 days, the adjudicating authority either accept or reject the resolution plan. Okay, this 120 days can be further divided into 90 and 30. Okay, next, section number 54E, declaration of moratorium. Once the application, the PPIRP application is accepted by the adjudicating authority, it will declare the moratorium. The same concept. On the date of commencement of PPIRP, adjudicating authority shall declare moratorium. When will this moratorium complete? Ceases on completion of PPIRP. Once PPIRP comes to an end, even this moratorium also comes to an end. Apart from moratorium, adjudicating authority will also appoint resolution professional. Who will be appointed as resolution professional? Before application is made to the adjudicating authority, this corporate debtor and financial creditors have appointed an insolvency professional. That insolvency professional will be proposed by this corporate debtor and financial creditor to be appointed as a resolution professional. The same person will be appointed by adjudicating authority as a resolution professional. Next, once the resolution professional is appointed, adjudicating authority will order this resolution professional to cause public announcement of initiation of PIRP. Okay, that is section number 54E. Next, section number 54G, list of claims and preliminary information memorandum. See, once this PPIRP is initiated, corporate debtor shall within 2 days of PPIRP commencement date submit to resolution professional. See, even the claims will also be submitted by corporate debtor only. Everything here will be done by corporate debtor only. Okay, within 2 days the corporate debtor has to submit the claims, that is to which creditors how much of amount is owed by this corporate debtor. Okay, such claims must be submitted to resolution professional. What he has to submit? First one is list of claims and preliminary information memorandum. What is the use of this preliminary information memorandum? Based on this preliminary information memorandum only the resolution plan will be prepared. You might ask that the corporate debtor has already prepared base resolution plan. Basically this base resolution plan can be either accepted or rejected by the committee of creditors. If it is accepted, then okay. If at all it is rejected, then again resolution plans will be requested from various resolution applicants. At that time this preliminary information memorandum will be useful. We will discuss that when the section comes. But the corporate debtor has to submit list of claims and preliminary information memorandum. Since the duty of submitting this list of claims and preliminary information memorandum relating to corporate debtor is given to corporate debtor only, there might be fair chance that corporate debtor might submit false claims or prepare false information memorandum. So there is a punishment also implemented on this corporate debtor. What is it? If any misleading information is submitted, then corporate debtor shall pay compensation to those who suffered the loss. Okay, due to the misleading information that has been submitted by this corporate debtor, if any third party suffers any loss, then the corporate debtor has to compensate such third party for the loss suffered. Okay, that is section number 54G. Coming to 54I, list of claims have been given by this corporate debtor. Now, based on this list of claims, resolution professional shall constitute committee of creditors within 7 days of commencement date. Okay, list of claims means here all the list of all the creditors will be given. Based on the list of creditors, committee of creditors will be framed within 7 days. Once the committee of creditors is framed, the first meeting of committee of creditors shall be conducted within 7 days of constitution of committee of creditors. That would be said in section number 54I. Next, 54H. Management of affairs of corporate debtor. As I have already told you, the management of corporate debtor will be with the existing management only. Okay, existing board of directors only will continue the business of corporate debtor. The management of corporate debtor will not be transferred to resolution professional, unlike CIRP. Let's see. Management of affairs of corporate debtor continue to vest with the present board of directors or management. Board of directors shall make efforts to preserve value of properties of corporate debtor. Okay. Now, see, the management of the business of corporate debtor is vested with current board of directors only. But the committee of creditors feels that if committee of creditors with 66% of voting decide to vest management with resolution professional, the committee of creditors don't like the management of this corporate debtor to be vested with existing director, because the existing directors are conducting the business of corporate debtor fraudulently, or there is a gross mismanagement in conducting the business of this corporate debtor. If the committee of creditors feels so, then they can by a voting of 66% resolve that the management of the corporate debtor must be transferred to the resolution professional. Once they decide so, resolution professional shall make application to adjudicating authority, and adjudicating authority also satisfies that affairs of corporate debtor are conducted fraudulently or gross mismanagement is there, then the management of corporate debtor shall be vested with resolution professional. Okay, basically under PPIRP the management will be with existing management only. The management of business of corporate debtor will be existing board of directors, existing management only. But if committee of creditors resolve with a voting of 66% to transfer the management to the resolution professional, in that case if the adjudicating authority also feels the same, that the business is conducted fraudulently or there is a gross mismanagement, in that case the management will be transferred to the resolution professional. This is said in section number 54J. Next, section number 54K. It deals with the resolution plan. First of all, corporate debtor is there now. He will submit base resolution plan within 2 days of commencement date, that is commencement of a pre-packaged insolvency resolution process. To whom he will submit? He will submit to resolution professional. Now the resolution professional will place this base resolution plan in front of committee of creditors. If committee of creditors approve this resolution plan, then it will be accepted by the committee of creditors. If the committee of creditors feels that the resolution plan, the base resolution plan is okay, then they will approve it. Otherwise they will reject it. Once they reject it, what is the option available? In that case, resolution professional shall invite fresh resolution plans from the resolution applicants. Okay, once the base resolution plan is rejected by committee of creditors, the resolution professional will request various resolution applicants to submit the resolution plans. Now various resolution applicants have submitted their resolution plans. Now these new plans which are submitted by resolution applicants are better than base resolution plans. That is felt by committee of creditors. Okay, committee of creditors feels that the new plans that are submitted by these resolution applicants are better than the base resolution plan, then they will approve any of that new resolution plan. Or they feel that these new resolution plans are not better than base resolution plan given by the corporate debtor. In that case, they will select from new plan or base resolution plan. Based on the approval, they will select any one of that. Or the committee of creditor fails to approve any resolution plan. Okay, they have not approved any resolution plan. In that case, resolution professional shall file an application for termination of PPIRP. The resolution professional will make application to adjudicating authority, asking adjudicating authority that these committee of creditors have failed to approve a resolution plan, so you please terminate this PPIRP process. Like this, application will be made to adjudicating authority by resolution professional. Hope that is clear. Next, section number 54L, approval of plan by adjudicating authority. Basically, if you see here in section number 54K, there is also another concept known as Swiss challenge. Basically, that concept is not discussed in our syllabus, but there is another concept called Swiss challenge, through which the resolution plan will be approved. I'll just explain you that. See, Swiss challenge means basically there is base resolution plan. This base resolution plan is given by corporate debtor to committee of creditors. Even though this base resolution plan is given by corporate debtor, there would be some resolution applicant who would have submitted it to corporate debtor. Okay, now let's say in this base resolution plan, the resolution applicant wants to settle some 50 crores to financial creditors. Now this base resolution plan is placed before committee of creditors. Committee of creditors have seen this base resolution plan, and now they will request for some other resolution plans from some other resolution applicants. By submitting this base resolution plan to the other resolution applicants, okay, they will show this base resolution plan to all the resolution applicants, stating that there is one particular resolution applicant who is ready to give 50 crores to us. Now keeping this base resolution plan in view, you submit your resolution plans. Like this, they will ask various applicants to submit the plans. Now they will submit the plans. Plan 1, plan 2, plan 3. Let's say some 3 plans have come. If this base resolution plan is shown to the resolution applicants and you have asked them to give a resolution plans, means all these 3 plans will be better than base resolution plan. Okay, let's say plan 1 said that we'll give 60 crores, we'll give 65 crores, we'll give 70 crores. Like this they have submitted. Now from these 3 plans, committee of creditors will select one plan. They will select plan 3. plan 3 is the winner here. Now under Swiss challenge, what committee of creditors will do is they will ask this resolution applicant there is this resolution applicant who has given this base resolution plan they will ask this resolution applicant to submit his counter plan to this plan 3. Okay, basically they will say this resolution applicant, see resolution applicant, there is some plan, this plan 3, under plan 3 we will be getting 70 crores. We are giving you an opportunity, if you want you can submit a better resolution plan than plan 3. If resolution applicant wants, he can submit a better resolution plan, or he can also choose not to submit. In that case, committee of creditors will go to plan 3. If at all resolution applicant submits somewhat better plan, let's say for 75 crores, they will go with this. Okay, like this Swiss challenge will work. Now since the application of, due to the application of this Swiss challenge, there is an increase of 25 crores in the value. Okay, if committee of creditors have blindly followed the base resolution plan submitted by the corporate debtor, they would be getting 50 crores only. But since they have applied this Swiss challenge, they are getting 75 crores now. This is how this Swiss challenge works. Okay, the committee of creditors can select the resolution plan under this PPIRP based on this Swiss challenge also. Next, we were discussing this now. 54L, approval of plan by adjudicating authority. Once committee of creditors approves the plan, it will be sent to the adjudicating authority for its approval. If adjudicating authority approve if plan conforming to requirements of section 30 subsection 2 under section, basically this section 30 subsection 2 is related to corporate insolvency resolution process. Under corporate insolvency resolution process also a resolution plan will be given. Such resolution plan must provide for certain requirements. Okay, there in section 30 subsection 2 we have seen some list of items that have to be included in the resolution plan. Now the resolution plan under this PPIRP should also include all the criteria, should also satisfy all the criteria specified under section 30 subsection 2. If it is not satisfying, the plan would be rejected by adjudicating authority. Next, note, I think we missed something, 1 second. Yeah, okay, nothing, we covered everything. Yeah, here note, if adjudicating authority passed order under section 54J subsection 2 and plan has not resulted in change of management, then first of all you have to understand what is this section 54J subsection 2. It is, we have seen that in case of PPIRP, the management of corporate debtor would be with the existing board of directors only. But if committee of creditors by a voting of 66% want to shift this management to the resolution professional, then they can shift the management to the resolution professional. Now, if committee of creditors by 66% asked to shift the management and adjudicating authority passed order under section 54J subsection 2, that means adjudicating authority also convinced that yes, the management has to be shifted from this corporate, the existing management of corporate debtor to the resolution professional. Okay, the adjudicating authority has passed such order and the plan has not resulted in change of management. Okay, during PPIRP the management was shifted, but once the final plan was approved, this plan has not provided for change in the management. Okay, the existing management only will be continued as per the plan, that is the plan given. In that case, if that is the situation, the adjudicating authority will reject the plan and will terminate PPIRP. That means here you can conclude that if at all committee of creditors during PPIRP passed 66% of by voting of 66% resolved to change the management, the existing management of corporate debtor, then the final resolution plan under the PPIRP should also provide for change in the management. Okay, otherwise adjudicating authority will not accept the resolution plan. Okay, this is the analysis that you can make. Next, section number 54N, termination of PPIRP. What are the cases in which pre-packaged insolvency resolution process will be terminated? First one, approval or rejection of resolution plan by adjudicating authority. Once adjudicating authority approves or rejects the resolution plan, then the PPIRP will come to an end. Or no plan submitted to adjudicating authority even after expiry of 90 days. The time limit to submit the resolution plan is 90 days. 90 days have been completed. Even after completion of 90 days, the resolution plan has not been submitted to the adjudicating authority. In that case, the PPIRP will come to an end. That is the first case. Now, apart from this, the plan has not been submitted within 90 days, and if along with this adjudicating authority has passed order under section 54J subsection 2, that means that we have just now discussed, that means committee of creditors wanted to change the management of corporate debtor from existing management to the resolution professional by 66% of voting share, and adjudicating authority has passed such order. Okay, if such order has been passed by the adjudicating authority under section 54J subsection 2 and no plan was given to the adjudicating authority, if that is the situation, then adjudicating authority shall pass liquidation order against the corporate debtor, because committee of creditors clearly don't want existing management. They want to replace the management. That is the reason why by 66% of voting they have requested adjudicating authority to shift the management from existing board of directors to the resolution professional. Now, apart from this, the resolution plan was also not given. If resolution plan was not given means the management, if the PPIRP is terminated and the liquidation is not initiated means this corporate debtor will be managed by existing board of directors only. This existing board of directors are performing frauds in the company and they are grossly mismanaging the company. Okay, keeping the company in those types of management is not correct. Thereby, adjudicating authority shall pass liquidation order against corporate debtor if these two conditions are satisfied. Hope that is clear. Next, rejection of plan by adjudicating authority. Plan has been given to the adjudicating authority, but adjudicating authority has rejected the plan. Even in that case also PPIRP will be terminated. Next, committee of creditors decided to terminate by 66% of voting and approval of adjudicating authority. Okay, if committee of creditors wants, they can by 66% of voting right can terminate the PPIRP, and by terminating PPIRP they can also convert this PPIRP into CARP. See, conversion of PPIRP into CARP by 66% of voting of committee of creditors. Committee of creditors by 66% of voting rights. See, presently there is a PPIRP going on against the company. While this PPIRP process, committee of creditors feels that by adopting PPIRP, the insolvency of corporate debtor cannot be resolved. We have to compulsorily adopt CARP only. We can resolve the insolvency of corporate debtor under CARP only. PPIRP is not suitable to this corporate debtor. In that case, committee of creditors can by 66% of voting right, convert this PPIRP into CARP. Then all the provisions, all the process of CARP will be followed. Okay. Now, by introduction of this PPIRP concept in the IBC, the situation will be there is particular corporate debtor. Okay. Now, this corporate debtor feels that his insolvency can be resolved through PPIRP. Then he can approach PPIRP. Once he approached for PPIRP, during PPIRP, he felt that through PPIRP he cannot resolve the insolvency, then he can shift this PPIRP to CARP. Okay, and if CARP also fails, there is liquidation only, no other option available. Okay, or it is not compulsory that every corporate debtor must go through PPIRP only. It is optional. It is also important point. PPIRP is not mandatory, it is optional. The corporate debtor can directly go for CARP also. If CARP fails, then directly liquidation. Okay, if CARP fails, from CARP he cannot come to PPIRP. Okay, this is not allowed. From PPIRP he can come to CARP, but from CARP he cannot go to PPIRP. Okay, if CARP failed, then directly liquidation, no other option will be available. Hope that is clear. We have completed this. Yeah, next section number 54O, initiation of CARP. During PPIRP, committee of creditors can by voting of 66% can decide to initiate CARP. In that case, PPIRP will be terminated and CARP will be initiated. That is section number 54O. And section number 54P is just a small section which says that some sections of CARP will be mutatis mutandis applicable even for this PPIRP. Those sections you can read. Okay, this is the entire concept of pre-packaged insolvency resolution process. Hope you completed the entire revision. Now there are some two small topics that are left. We'll revise those two topics. It would hardly take some 5 minutes. See, first concept is fast track corporate insolvency resolution process. Now, to which companies this fast track corporate insolvency resolution process is applicability? First of all, it will be applicable to all the small companies under section 2 subsection 85 of the Companies Act, and for all the startups, and also for all unlisted companies having total asset value of not exceeding 1 crore rupees as per the preceding financial year. For these types of companies, the fast track corporate insolvency resolution process will be applicable. Hope this is clear. Now, time period. This fast track corporate insolvency resolution process will be completed within 90 days. Whether any extension can be granted? Yes. If the application is made to the NCLT by resolution professional, which is approved by at least 75% voting share of committee of creditors, in that case the NCLT will grant the extension, and the extension can be granted for maximum of 45 days. Hope this is clear. And also extension can be granted only once. This is regarding extension. Now, application for fast track corporate insolvency resolution process can be made either by financial creditor or by operational creditor or the corporate debtor himself. And along with the application, you have to submit proof of existence of default. Hope this is clear. These are the provisions relating to fast track corporate insolvency resolution process. Now, next concept, voluntary liquidation by the corporate person, section number 59. Now, for the purpose of initiating voluntary liquidation, certain conditions are to be satisfied. What are they? Let us see. First of all, the directors, okay, majority of directors of the company must give a declaration through an affidavit stating that they have, verified the position of the company, and in their opinion, the company is not having any debts due, or in case if at all any debts are due, the company will be in a position to repay those debts with the amount that is realized from the sale proceeds of the assets. That has to be the first declaration that must be given by the directors. And also they must also declare that company is not going for voluntary liquidation with an intention to defraud either creditors or any other persons. Okay, the intention of company is not to defraud anyone. These two declarations must be submitted. And also, along with the application, certain attachments has to be given. What are they? First of all, audited financial statements of the company for the preceding 2 financial years must be given, and also report of the valuation of assets of the company, if at all the valuation is conducted by any registered valuer, then even such report must be given. These are the attachments. Next, within 4 weeks of the declaration that has been given by the board of directors, the company must pass a special resolution from the members, okay, taking their approval for voluntary liquidation of the company. Hope this is clear. And in case the company is going for voluntary liquidation after completion of the time period fixed in the articles, okay, the articles of the company says that the company will be in existence for only let's say 2 years. Now the 2 years has been completed, so company is going for liquidation. If this is the case, or company is going for the liquidation since the objective that has been mentioned in the articles has been achieved, or any other event that has been mentioned in the article has been triggered. If these two are the reasons why the company is going for liquidation, the voluntary liquidation, in such case ordinary resolution of the members has to be obtained. Hope this is clear. Now once the approval of the members is taken, within 7 days of the resolution, notify the same to the ROC and the board. These are the provisions relating to voluntary liquidation. Hope this is clear. By this we have completed entire revision of insolvency bankruptcy code. Okay, we have covered IBC process, that is CARP process. We have covered this liquidation process. We have covered PPIRP, and we have also covered this fast track corporate insolvency and voluntary liquidation. Hope this is clear.